We're here. The first ever Chart Fanatics live. First ever Chart Fanatics live. Thank you all for being here. We are going to have an incredible first ever. Oh, I just realized, yeah, there we go. First ever live stream. Can you see me? Can you hear me okay? We're doing a test. Thank you all for being here. This is going to be incredible. I've not done anything live, even a live call, for a very, very long time. But let me just say, I want to say a few words before we have our first guest join us today. First of all, thank you to the team for helping me put all of this together in such a short span of time, even setting up this entire office and studio setup just for all of you and to host this and do this right. Just like that intro screen you just saw there, that got literally delivered to my email 20 minutes before we went live because the team has been working away. Now, let me just say a huge thank you to every single one of you, first of all, because we wouldn't be here without you. We wouldn't have achieved everything that we have with Words of Wisdom, Chart Fanatics, and now Chart Fanatics Live without you. Huge shout out to all the team, of course, and one of our guests today. All of our guests today, obviously, have had their hand in our growth and in what we've been able to achieve. But especially, of course, our very own Jack Schwager. Without Jack Schwager, I probably would never have had the inspiration to start the podcast in the first place. So the fact that we're here is a huge shout out to him, and that's why I had to have him on stream one. So make sure that you have your questions ready and topics ready, and really think about your questions, guys, right? Really think about your questions. I've got to get used to talking down the camera rather than other people are looking around, but really have your questions ready because this is a great opportunity. This is the first time probably that you've ever seen within the industry, especially this level of guests. But this is what I've always wanted to do, is do live podcasts. And I always thought, how am I going to be able to do this? How am I going to be able to pull this off? But let's be honest. This is the way, right? A live stream, it makes it so much easier. We can do it remotely. But this is our chance to be able to do live podcasts for you and get your feedback, get your questions live and direct on the live chat as well. So, yeah. What are your thoughts? Are you enjoying so far? Are you excited? I know, it's incredible. It's incredible. And you don't want to know who we have coming up for week 2. Don't forget as well, from tomorrow, you're going to have live trading as well, which is obviously what is so important for all of you as well, to see our very own Marco Trades, whose episode was the last one on Chart Fanatics, done incredibly well. You're going to see liquidity, inducement, trading strategy live every Tuesday and Thursday. This week, actually, Tuesday and Wednesday. And then obviously TG Capital as well, who's done incredibly well, pulling over $400,000 in payouts from prop firms. And he's going to be trading every Wednesday, but this week it'll be Thursday. So we're very excited for that. He's actually in the chat right now as well. So huge shout out to you, Tyler. But before we do get started officially as well, a huge thank you to all of our sponsors, of course, who make this possible, who allow us to create high quality production. So whether it's Prop Firm Trader, as you can see on screen right now, TradeZella, of course, very excited to speak to Umar, but just generally, obviously, TradeZella is an incredible tool for traders, and the feedback we get is absolutely insane. But again, it wouldn't be possible without our sponsors to be able to host such an incredible live stream, an incredible Chart Fanatics show, as well as Words of Wisdom around the world in person with the highest quality production, of course. But where is everyone from? That is a good question. Someone said that. Like, where is everyone from? Where are you tuning in from right now? Remember, make sure you share this on your socials. Tag us at Chart Fanatics or Chart Fanatics Live on Instagram. And we'll spread the word and we'll share the love as well. But we absolutely love it. We do have giveaways to announce in terms of winners. We have Canada, we have Italy, Kenya, Australia. This is incredible. Liverpool, India, South Africa, Estonia, Transylvania. Oh my God, I can't keep up. Houston, Arkansas, Nigeria. Big shout out to every single one of you. Punjab, Pakistan, Indonesia, Kenya again, Pakistan. Got a huge love for Kenya. My brother-in-law is actually Kenyan. A lot of people don't realize that. I actually did a podcast with him very early on when the podcast was early. Huge shout out to Apex, of course, for sponsoring the show. one of our actual first sponsors alongside TradeZeller. Funded Next, a new sponsor of the show as well. Absolutely phenomenal. Hawaii, Somalia, Northern Ireland. Wow, this is incredible. Thank you all for tuning in. It's amazing. This is what trading's all about, though, being able to connect with people all over the world. The charts are universal. It's a universal language. It's not a case where, regardless of where you're from, you can't get access to trading or you can't understand trading. This is the beauty of it. It brings a global community, a global family all together, which is absolutely amazing, really. Absolutely amazing, honestly. I love this. It's 2 a.m. That is dedication right there. That is dedication right there. That is dedication. Let's let them know. Let them know. Let them know what we say here. Yep. We have to get used to doing lives. We're going to have to get used to doing lives, really. But everyone, thank you for being here. It is incredible. Let's make sure, I guess. Let's make sure our first guest is coming right up. And me. There we go. Wow. Wow, we do have to get used to volume too low. Is the volume too low? What are people saying? I've seen that's the second comment I've seen. We want to make sure this is perfect. Maybe I'm just looking in the wrong direction. Volume is a bit low. Okay, what can we do there? Let's see what we can do here for that. Maybe is it me? Is that better? Maybe I just need to be more directional. Volume's all right. We got a mixed opinion here. I'll try and focus for today. I'll try and focus whilst we the team can in the background look at that. But I'll try and focus my my direction of my speech. Stay closer. Okay. Okay. Good. Okay. Could be people speakers, but I think it seems more people are saying so. Yeah, that's all good. Hey, whilst we wait for our first guest, I will make sure to let you know that we've got an incredible schedule for you consistently, and we're going to build this out. This is just the beginning, right? This is just the beginning. Today we've got a live Q&A with guests. I will look to do, of course, whether it's psychology pieces, even market breakdowns myself, because I know a lot of people recently have been messaging me about my trading, etc. But really, you've got live traders Tuesday, Wednesday, Thursday. We're looking for incredible trading talent and obviously verified traders to maybe potentially take a spot on Friday as well. We have a new update coming to chartfanatics.com also, where you can actually finally pick and choose the playbooks that you want to download. So that should be going live in the coming days. And we're currently working on phase 3 of Chart Fanatics. So this is phase 2 right here. This is phase 2 in terms of starting the live streaming. Phase 3 is already in the works, and that is going to completely change the entire trading industry. I know a lot of people try and say that, but we like to think anyway that we've consistently said that, but backed it up every single time with actions. And really our whole goal is to really have as much of an impact for free level of education, raise the bar in terms of transparency, lower the barrier to entry in terms of education and access, and just have the largest impact possible, through everything that we do, whether it's Chart Fanatics Live, Chart Fanatics, all words of wisdom. And again, it's a huge thanks to all of you for, interacting, sharing your love and feedback with us over the years. And we just want to consistently be able to do that more and more, right? More and more every single time. But yeah, it's a little loud now. I apologize. Yeah, we'll try and find the balance. I do tend to shout a little bit. But I will try and find the happy medium there. But I'll keep an eye on the chat. It'll be interesting to know actually from the chat, what are most people trading? Are you trading Forex, futures, options? Like I know we started Forex in the beginning with words of wisdom. Futures has been quite heavy on chart fanatics, but like here on the chat, you know, where are we? We can tolerate. What are the main traders here today? Are we Forex, futures, options, stocks? A lot of Forex. Wow. Futures, Forex, indices, futures. Wow. Forex, options. Wow, we got a big... There's a lot of Forex. There's a lot of Forex. Wow. Some options as well. A newbie. That's what's great to have you, Eddie. It's great to have you. Stock swings, CFD, all kinds. Wow, yeah, it's very diverse. A lot of FX, though. It's great to see you. Great to see you all here. Commodities, yeah. Wow, wait, BTC. Someone's just BTC. I like that. Well, we have this ticker actually at the top here, as you can see, just above my head. Let's see when BTC comes along. But that's a live price. That's a live price that is showing you there. I know BTC had a movement earlier today. I know a lot of people are really thinking about where are we going to see crypto go next. I know Ethereum had a large push the back end of last week, and people are we're kind of in an interesting zone, right? I was listening to a good friend of mine. We will try and get him on here, verified crypto trader main. I was listening to actually a clip or maybe a story or a video he put out, and it was very interesting what he was saying. You know, he's someone who's been in many market cycles, so I do take what he says. For real, you know. And he basically said that, you know, we need to see BTC continue to move higher from here if we're going to have an extended bull run. If Ethereum only moves and BTC starts to sort of fade away and starts to pull back a bit, then we could see this be a shorter bull run than people maybe are expecting. Yeah, our first guest should be here. Our first guest should be here very soon. I'm very excited. I'm very excited. When am I going to interview the short bear? That's a great question. We'll have to ask Lance. Lance knows him, obviously, personally. We'll have to ask Lance. But I respect people's privacy as well. And I believe the short bear, I think his name is Lucas, if I'm not mistaken, is a bit more of a private person. So, hey, we never know. We respect privacy, but I always extend the invites as well, of course, especially to such legends. I know he's going to be in the next Market Wizards book, which is incredible. So huge congratulations to him if he ends up seeing this. But it's incredible. Absolutely incredible. But I will say, guys, this is it. This is it, right? We're about to have our first guest join us right now. So make sure you all... Actually, I need to get him ready, to be fair. Let me not get too premature here. Let's get ready for our first guest. There we go. There we go. And he'll be joining us in just a second. But what I will say is, as we begin, make sure to keep in mind that this is your chance to ask some questions. We're going to have the live chat up, obviously. I'll be going through some questions as well. We'll go with the flow as always, like we do with Words of Wisdom. But this is the one. But make sure you smash the like button right now. And remember, we are the only show that has verified traders where we actually put in the work. We're the only show that is. Obviously, we're going to have Jack Schwager. I don't want to take anything away from him. A huge inspiration taken from him. But we are about to be joined by the one and only. Let's just make sure we do this right. The one and only. Oh. I'm trying to do this right. I can't do it right. This is what happens on your first one. Here we go now. We got to change this to... I believe this one. Oh, that's still clapping. Sorry. Sorry, Umar. 1 second. We're trying to get used to this. We will get there. It's either this one right here. Here we go. You can do it. Yeah, you can do it. I hope so. I appreciate the vote of confidence there. We will get there. I know we got the wrong thing on screen right now, but there we go. We did it. We did it. Umar, thank you for being here. I hope we can all hear you. Okay, we're going to find out in a second with that.
What's going on, Riz? Can you hear me?
I can hear you. Everyone at home, can you hear Umar?
I cannot see you, though.
Ah, yes. Let's see if that can work whilst I'm on the stream. You might not be able to see me just because I'm on the stream, so the camera's being used there.
Okay, all right, no worries. I'll just listen into you.
Sorry about that. Sorry about that. We'll get that sorted. Can everyone hear Umar okay, though, just before we begin? Yes, sir, we can hear him. Amazing. Umar, thank you for being here. Let me just do that again because I definitely flopped the first stream getting our guest on, so we just got to make sure we do it right. I don't know if you can hear that, Umar, but we've got a nice round of applause on the stream deck. We're getting a bit cheesy right
Nice,
now.
nice. Yeah, I hear it all, man. Getting super cheesy. I
I'm
think
sorry.
London's got you being super cheesy, huh?
I know, especially for the first stream. But yeah, if anyone can tell, my office is on the top floor, and it is for some reason on the first stream day. It's been a very hot day in England, which we never get, and it's like a sauna in here. So don't mind me. We're going to focus on Umar. That's why we're here. But Umar, it's incredible to be here with you. As an introduction, as we like to do on obviously Words of Wisdom, we have a verified 8-figure trader, someone you all know and love, have followed his journey, no doubt. The amount of traders that I come across on a day-to-day basis who started their journey and were inspired by this man, Umar Ashraf. Also the founder of TradeZeller, a trading tool that is absolutely incredible in helping so many traders. And I hear that from traders. Sorry to say that, Umar, in front of you right now. I know it probably gets a bit awkward, but the amount of traders who say that to me is incredible. But here we are. Umar, I don't want to take up too much of your time because I know you're on a trip. So I appreciate you taking time away from your trip to be with us here today. But I want to just go straight into it, really. Like, when we look at traders today, you've been in the industry for a long time. You've observed the industry for a long time, seen a lot of changes, lots of market cycles. If I was to ask you, what is the biggest mistake you see traders make today, what would that be to you?
Yeah, first and foremost, thank you for having me on, Rays. And I think what you're doing, what you guys are doing on this channel, and on Chart Fanatics overall, and I think everything overall for the trading industry, is phenomenal. So keep it up, keep crushing it. But besides that, the biggest tip. What was the question again? Sorry, I was thinking about what I was going to say to you.
The biggest mistake that you see traders make today.
Biggest mistake. I think, oh man, there's so many mistakes traders make, but I think the simplest mistake that people make is they have a very tight horizon to become successful in this space. And I think when people start, they have their runway to like 6 months or maybe 1 year of being successful, right? I think if you just expand that to 2 to 3 years of like, hey, this is a real career I want to take serious. Let me expand my time, element of it. Let me give myself 2, 3 years, and then let me focus on the fundamentals very early on, and aim to become a good trader, not aim to make money. And if I can do that and stay alive for 2, 3 years, there's a very high point that you'll make money.
No, I love that. It's so interesting because I believe when you're in it, like when you're in that first year, 2 years, you think you're giving yourself a long time horizon. I remember I did. I thought a year was a long time horizon, and only when you really go through it do you start to realize actually what that means. Like I know we obviously did the Chart Fanatics episode, which I'm sure everyone probably has watched. If you haven't, go check it out. But I know you mentioned in there obviously the 5 phases of trading. So if you were to, everyone who's just on here right now on the live stream, like what would you say is sort of the time horizon they should be looking at in terms of that learning process before they start to maybe see improvements in their trading?
I think being at that 24-month, like 2 year mark is a good number. I think by 2 years, especially if you do all the right things early on, is like a great time to have a good foundation, and I think get to a point of consistent profitability. I think in today's times, I am seeing certain people, because of the accessibility to information and the tools and things, as things evolve, I'm seeing people hit that profitability point even in 12 months now, right? Because I think what I start to see early on is the people that are focusing on the right things to learn and doing the right things within the 12 months are able to get ahead. But then the people that are, jumping from strategy to strategy, market to market, different ways of trading, not understanding the basics from a strong point of view, rushing to make money, having proper risk management. The people that are able to do that in that 12-month period, I have seen, quite a few people evolve into that. But I would say 12 to 24 months is a good number.
Definitely. No, definitely. And it is interesting, actually, now that you mentioned that, because the amount of access to information that is available is so much higher than it's ever been. So much higher than it's ever been. And I think a lot of people,
But to that, there's also a flip side, right?
there is, yeah.
there's a lot of information, but now we have a lot of bad actors. Like the rate of bad actors in the trading space is like the worst out of any space out there. You take e-commerce, you take SMMA. So it's like someone with 6 months or a year of trading experience immediately goes on YouTube or these channels, and they'll start to, teach, or they'll start to educate people. And a lot of the information that people are educating others on isn't the right information. So someone that can kind of become profitable in a 12-month period because they're hopping around from bad channel or bad information to bad information, that 12-month period, in my opinion, just gets crushed.
It's so true. No, it is. And I think that's why it is very important for people to be more intentional. I would say a large part of that kind of comes back to your original point of the time horizon. I mean, a lot of people will find someone or come across someone and just rush without even just being a bit patient to kind of just take a step back and sort of take in, okay, what is this information? Who is this person? What sort of accolades or track record or experience do they have, etc. But kind of to lean on and go off the back of that question, what's something you wish someone told you in your first year of trading? So in that first 12 months, what's something that someone, if someone could really, if you had a chance to speak to someone like yourself in that first 12 months, what would you love to be able to hear in that time?
I think I wish someone told me this exact thing that I'm about to say, but also I think I would have still had to go through it. But I think if someone told me just control the things I can control, right? For example, risk management. I can control how much I will lose on a trade, right? I can control my entry. I can essentially control my exit. I can control, the setups I take. I can control the days I wish to trade and don't wish to trade. If they just kind of really, really narrow that into my head that, hey, just focus on the things you can control. The market is very random. There will be things that are 100% out of your control. You might have the best setup in the world. At times, it may not work out. You may have the worst setup, and it may work out. The only thing you can control is how much you invest and how much you risk on a trade. And if you keep that consistent over a long period of time, you will make it out alive in this game, right? And if you don't, no matter how good your setup is, no matter how good you trade, if you don't control risk and you aren't managing that properly, that 1 or 2 weeks of bad trading or bad markets are going to ultimately wipe your account.
So being able to stay in for the long term, and really identify those days and identify those trades, by sticking that risk small.
Yeah, and you see, the thing is, even now, I have days like today. I took a trade on Tesla. If you guys have been watching Tesla on the open today, you'll see how Tesla opens up really strong, breaking out of really, really strong key levels, has momentum for Friday. I had an okay entry, I had an okay exit. If I got in exactly where I wanted to get in and I got out exactly where I wanted to get out, I would have made so much more money. Now I can do two things in that exact situation. I can sit here and I can dwell on that, and I can say, wow, I left X amount on the table and I'm so mad, and now I'm going to make it back on the second trade or third trade or tomorrow. Or I can say, all right, well, I managed my risk properly. I took the entry that gave me good confirmation. The entry prior, even though now it looks good, in that moment it did not look like the best entry. Same thing with the exit. I took the exit because my profit target was hit. The trade started slowing down. But obviously, once you get out of the trade, you start to go, oh man, if I held for 2 more points, if I held for 1 more point, you just can't do those things. You have to let that go, and you're never going to have those perfect trades. Control your risk, keep that consistent, control your execution, keep that consistent. You're going to have things that you're going to have trades that are rough around the edges, and you just live with that.
Definitely. It's interesting you say that, because I think one thing that's kind of new in this day and age that we're trading in now is people will be in a position and they'll share it online, and then they'll get all this feedback of like why they're wrong, why they shouldn't be in that position, why they should have sized more or less or be out of that trade or the other direction. And again, it's about focusing on you and focusing on that process. One question actually that someone's put in the chat here, which I found quite interesting, I would love to hear your thoughts, is, do you think risk to reward is what you should be focusing on, or win rate, or neither? What's your thoughts?
I think number one should be a risk to reward, right? They're both important, right? But what's obviously more important, I think your risk to reward is more important. It becomes a double point problem. Problem number one is making sure your risk is consistent. You're able to manage your risk effectively. You're able to make sure that the trade you are taking, you do have money to be made. Because I've seen people, or I've seen situations where someone loses 500, 500, 500 on a trade, and then they have one trade where they make 300, but they could have made, I don't know, 1,500 on that trade. So then it goes, okay, I'm managing my risk correctly, but it's now I'm not letting my winners run. Therefore, this trade or the stat around this metric is really bad. I think once you solve that, then the second question goes into your win percentage, right? Your win percentage, I think, relatively the easy metric to solve for, because if you have, let's say, 50 trades, you obviously go through those 50 trades and say, okay, well, I have 30 losers, I have 20 winners. Are my winners good winners? Meaning, did I execute my game plan on these? Did I have the proper risk on these? Did I execute these trades well? Then same thing with the losers. Were they good losers? And sometimes you'll have trades that you lost money on, but it could have been avoided. That trade maybe didn't fall into your game plan. The risk on that trade was terrible. Same thing with winners. You might have winners where you made $2,000, but you were down $4,000 at a particular point. So I think with win percentage, it's an easier metric to focus on once you start having your data. But I think number one is making sure your risk to reward is set, it's good, it's consistent, it's manageable, and then you start going into every trade and start seeing what are the mistakes you're making. This is something that should be done, in my opinion, day to day and a week to week basis.
I love that. And kind of on to the next question. It leads into that. Is like, what would you say is the best method to identifying an A+ setup? Because a lot of people talk about A+ setup and dynamic sizing, but one thing I think that we don't see too often is actually the sort of route to identifying a higher probable setup, an A+ setup.
Yeah, okay. So there's a lot of different factors that go into dynamic risk and an A+ setup. So for me, the traders that have made the most amount of money and will continue to make the most amount of money are able to have risk that adjust accordingly to the market, their trade setup, how they've been trading, so that risk will adjust. Now, I don't think any developing trader should focus on dynamic risk very early on. I think that is something only traders that have had some consistency, give or take, let's say 6 months or so, they should be focusing on dynamic risk, right? For me, when I'm looking at an A+ setup, I think today on Tesla was a prime example. I'm looking at market, right? Market has to be at a favorable point for me. For example, if let's say we have FOMC coming out tomorrow. If we have FOMC coming out tomorrow, very rarely would today being Monday, or let's say today being Tuesday, I would trade, aggressively, or I would look at any sort of setup as an A+ setup with that news coming out tomorrow. So that would immediately, reduce my risk size. That would immediately reduce the idea of anything being an A+ setup. Then number two, it depends on what that trade is and what is happening. So if you go to Tesla once again, right? If you guys look at Tesla, the whole 336 to 340 was a key area. We opened right into that, saw some strength, saw some momentum, right? And then right at 339, 340, we start holding. This is the same level from prior trading days that we've held. We've had strong volume around these days. We've had strong action around these days. We've also opened really, really strong. Me seeing a setup like that, or me seeing the market move in that certain direction, immediately makes me become a little bit more aggressive going into today. Same thing if you look at Tesla today pre-market, we'll see that Tesla pre-market also made a strong move towards the upside. So looking at market dynamics, like what is happening in the market, looking at that particular name, if you're looking at Tesla or Nvidia or Apple, or even if you're just trading ES, right? Looking at what is happening with that name, be it pre-session or be it during the open. I think once I factor those things in, the third component for me to dynamically risk and also look at an A+ setup is sometimes I'll have that A+ setup and everything with the market aligns, but now my risk side comes down to how I've been trading, what is my risk on the past few trades. So for example, if let's say last few trades I've been sloppy, I haven't been able to find momentum, I don't have a cushion, I can have the A+ setup, but will I go very aggressively hard on that? It becomes a little bit challenging, right? Because the biggest thing for me as a trader, and I think everyone should have this, is when I look at a trade, I always look, what is more valuable to me in this certain situation? Is it me making the 40 grand on the trade, or if I'm wrong, I lose 20 grand while I'm already in drawdown, while I've already been trading worse? What is more important? And I'm like, well, losing the 20 grand will hurt me way more than potentially making the 40 grand in this situation. Therefore, I like this setup, but I will reduce my position size right now. So, as you can see, there's a lot of different factors that go into it. It's not just I wake up and, I flip a coin. I'm like, all right, I'm going to risk more. I'm going to risk less. There's a lot of factors that go in. But once again, any developing trader, you should not be, adjusting your risk size, even if you have a good A plus setup. Unless you've been doing it for 6 months and you've been able to execute, effectively for 6 months consistently, and you've been able to manage your risk and find good setups and have this setup or multiple setups that you can execute on, then adjust your risk size up and down.
I think what's very important, as you say, is it's not just a simple, this is an A plus setup and that's it. I think the misconception when people hear that is they think it's only strategy based in terms of there's only like a particular playbook that is A plus and therefore automatically means that you size up. And I think you've really hit the nail on the head there in terms of the different layers and circumstances and things that need to align to then lead to that decision. It could be even what's in play in the market, as you mentioned, how volume and action has been, how the performance has been. All of these factors go into an A plus setup, which is a really incredible answer. Thank you for sharing that. Someone asked an interesting question here actually in the chat. Now it's in regards to prop firms though, but I would take the same thing and just relate it to in general, like regardless of whether it's prop firms or personal account. But they're saying how to handle drawdown, like a deep drawdown. So they're saying on a prop challenge, but let's just take it universal because I guess it's the same mindset. So like, where's your headspace been whenever you've been in a deep drawdown in your career, and how do you handle that? What was the steps that allowed you to overcome that?
Oh man, drawdown. No matter how long you've been in the space for, is always hard. I think even now for me, it's still hard. Not that I know it's still hard. It's just something that happens, and the reason I'm explaining the feeling of it is because it doesn't get better, right? It's not like, oh well, when I'm trading for 5 years, I'll be so comfortable in drawdown. Um, you do start to learn how to adjust and deal with it, but it doesn't get easier. You do have to sometimes make adjustment in your trading, but the big question to do whenever I hit drawdown, right, or I hit a bad streak, is to take a step back and ask yourself why, right? And the why kind of solves a few questions of like, is it actually I'm just trading like an idiot? Like genuinely, is it me just trading like a pure idiot? Did market conditions change, right? Because this year, everyone's seen market has rallied super strong, and then you go into like end of January till February and market starts selling off. And then we have all of these, news going on around the world of war and, tariffs and whatnot. Then market starts to switch direction. Then market starts to pick back up. Then market starts to go back down very aggressively. So the sentiment switches we've seen this year have been very, very fast. And sometimes when you're trading, you start to adjust to that very slowly. Same thing on like, even if we are in a strong bullish market for a short period of time, sometimes you get some really fast and active markets that slow down to smaller and slower markets. So asking yourself, like taking a step back and saying what's going on, and this has happened to me quite a bit, right? Minus me even just being in drawdown, just periods where I've just traded really, really bad. It's been from points of like market gets hot, I size accordingly, I'm very aggressive. The moves are 10, 20, 30 points. Market slows down. I'm looking for a 10, 20-point move. Now it's not a 10, 20-point move. It's maybe a 5-point move, but because I'm waiting for bigger moves, I'm getting stopped out, I'm getting chopped out. Frustration starts to build up. You start to tilt, you start to take stupid trades, one paper cut trade to another paper cut trade. Next thing you know, you're in drawdown and you try to keep doing the same thing. So it's taking that quick step back, realizing that, hey, either the market shifted or I shifted or either both shifted, right? Because typically if market shifts and you don't adjust to it, you're going to shift, your behavior is going to shift, your sizing is going to shift. For some people that size up, for me, I have periods I have sized up when I shouldn't have, but the right thing to do is, hey, I'm in drawdown. Why am I in drawdown? Is it bad trading or is it markets that I can't read? Okay, now what are the next steps? The next steps are for me to build consistency and for me to adjust to the market by understanding what is going on. And number two, reduce my size, reduce risk. I want to make it alive in this market. By taking a big swing when I'm down is the fastest way to like never get back up. You're down, don't take a big swing, adjust, look for the opportunities, trade with less capital, build consistency, be aware of what's happening in the market, and adjust accordingly.
I love that. Off the back of that, there's another question that was asked, which is in regards to how do you know the difference between just a losing streak on plan versus you're making a mistake and need to change something?
Uh, yeah, I think that's where, the self-analysis comes in. Like, let's say you have a setup, right? I'll give you an example. Let's say I have opening drive setup. I'm looking for momentum on the open, or maybe I'm looking for a midday continuation setup, looking for continuation, after 10:30 a.m. initial balance till 11 a.m. Now let's say that's happening during a very hot market that's going up. Now, if let's say for 2, 3 days I'm on a losing streak and I'm looking to trade the same setup, I go back and I'm like, okay, what am I looking for? What happens after my setup? Wow, the market sells off after my setup. Market continues to sell off. Let me zoom out from a higher time frame. Let's look at what is happening in the overall direction of the market. Market is bearish. Maybe it's not long-term bearish. Maybe it's like a week or 2 week bearish in a weekly time frame. You start to go, okay, well, this setup I'm trading just isn't working in this market condition. Or sometimes you go back to it and you're like, wow, my setup did work. I'm entering too early. I'm exiting too late. What's causing my entry and exit too late? Oh, wow, I'm trying to make more money. Or maybe I sized up too early, right? Because I see that common theme happening with traders. They'll trade for 1 month and they'll go, hey, Umar, do you think I'm ready to size up? And I'm like, no, you're not ready to size up. Give it 6 months or a year. So I think if you go into that and you just look at your trades, you're like, oh, wow, I'm sizing up. Hence why, because I'm sizing up, that is leading me to take on another stupid trade. Or because I exited too early out of my yesterday's trade or the trade prior, that is leading me to tilt and take on a terrible trade right after or a terrible trade the next day. So I think it just comes down to you, consciously looking at your trades and understanding what is happening and why, and like just keeping that why going over and over again, right? And for me, that's one big thing I've done in my trading career, I guess, is just asking myself why, why? Why not just with myself, but same thing with the market? Why is this happening? Why do I think that's happening? Market's going up higher. Why do I think it's going up higher? Well, what are the different pockets I can enter? What are the different pockets I can exit? And just keeping that, consistently going over and over again.
Yeah. One thing I am interested in to know is, has trading at this point gotten easier for you over time, or what's the reality of trading the length of time you have?
I don't want to say trading's gotten easier. I don't think it ever really gets easier, but I do think one thing changes, and that one thing that changes is you get the confidence to realize that, okay, if I do X, Y, and Z over a long period of time, I will make money or I will be successful. And I don't think, and I've mentioned this quite a few times in the past, that hasn't happened to me until maybe like year 7 or year 6, right? Until then, every year I would start trading. I'm like, oh shit, can I do it again? Oh shit, can I do it again? So even now, like year 12, 13, I don't even know what year it is now. Every year I go into the markets, it's still hard. Like making money for me is still hard, right? Like regardless of what's posted online, like it is still difficult. It is still mentally draining. You take a loss, it still like hurts. Not always because of the financial reasons, but because of like, oh my God, that was such a stupid trade. How could I make that trade? Why did I not see that? Why did I not size properly? Oh my God, that was such a good setup. Why did I not add more capital? So those things happen. And keep in mind, as a trader, I'm assuming most people want to keep increasing capital. They want to keep increasing profits. So the pain point keeps increasing because year after year, your risk tolerance increases, your capital increases. So it's still difficult. And then I'm still dealing with my own internal challenges as a trader. I'm still trying to size up more. I'm still trying to, build bigger positions. So I'm still going through that challenge of like, okay, well, I now want to size X amount from my current level. How do I do that? How do I now take a bigger position? Right. So it's consistently difficult. I think if I stayed at like what I used to risk 5, 6 years ago, maybe it would have been easier. I think as a trader, you want to keep evolving, you want to keep growing. It gets challenging, but also the other part is markets keep growing, markets keep changing. The markets we have today are very different markets than we had 2 years ago, 4 years ago, 5 years ago, right? And then, some people might have a question, well, are the markets different today than they were 5 years ago? Yes, but the markets 5 years from now will also be very different than the markets we have today, right? So things are going to keep changing, and when they keep changing, we have to start adjusting and seeing the change and seeing what's happening with the market movement, seeing what the trends are. Like we're seeing the big AI hype, right? That's been going on for some time. Any name that's attached to AI is just like skyrocketing. If you guys have seen PLTR, Um, so those adjustments need to be made, and those adjustments are, always challenging and they're always difficult. And this is a challenging and difficult, profession. And as long as you're able to, understand that and kind of adjust to that, you'll be fine.
That's great, man. That's great. There's actually an interesting one. A mutual friend, Jay Ortani's in the chat, and he's asking a question himself. So I'll send that to you right now, which is, how did Umar go? So how did you go from five-figure P&Ls to six and seven-figure P&Ls? Were there any? I'm adding this on, but were there any sort of barriers or hurdles you had to overcome? Any particular steps that had to make that happen?
Yeah, first and foremost, shout out to Jay. Jay's the person I think I even mentioned on Chart Fanatics.
Yes.
Jay's a prime example of someone I've seen go from like, I think from 2020 to 2021 to like making nothing to being unprofitable. I think it took him 7 months or 8 months. Correct me if I'm wrong, Jay, but I think it was 7 months. And a year later, I remember his guy's profitable. 2 years later, he's like scaled up. Now I seen him recently. I think he had his first 100K plus day, I think, or a month. I'm not sure what it was. I saw 100K and I was like, oh shit, that's crazy. But I think the struggle of going through, scaling from 1,000 to 10,000 to 100,000 is all relatively similar. There are some challenges. For example, I trade options, right? That's not what I primarily trade, but that's one asset class I do trade. I cannot go and trade options with $1 million in cash and buy, you know, 2,000 or 3,000 contracts of SPY or Tesla right away, right? Getting filled and, you start to having liquidity problems at that point. So position sizing starts to adjust depending on what you're trading. Now, obviously, if I'm trading equities or if I'm maybe trading futures, depending on what it is, the liquidity is not the biggest issue. But for options, it's definitely an issue. So in 2019, 2020, when I traded options, uh, you know, buying 50, maybe 100 contracts wasn't difficult. Now, when I'm buying contracts, I'm sometimes buying 800 to 1,000 contracts at a given time, and getting in those contracts are not the same way as I got into contracts 5 years ago. Now I have to kind of maybe buy 200, maybe 300, maybe 400, depending on what stock it is or what name it is. And then I also have to start paying attention. Hey, does this name have enough volume? Does it have enough, open interest? I can't just go and trade any name. I have to be careful. So that's why you'll see me trade Tesla or SPY. Liquidity is there, but also once again, with 1,000 contracts or 800 contracts, I can't go in and hit market order buy, market order sell. The slippage is going to kill me, right? So that's one problem that you start to deal depending on asset class. But I don't think if you're trading equities or futures, that's a problem many people are really going to have. Second problem is I think going up in size is always difficult. So for me going from like, four-figure P&Ls to even five-figure P&Ls, like I remember, I don't know how many years it was when I had my first five-figure P&L. I made more than 10K and I was like, oh my God, this is crazy. And then I think in 2020 was when I had my, or was it 2019? I think it was 2019. 2019, 2020 when I had my first six-figure P&L, which was in an options trade. It was some stock. I forgot what stock it was. It was like a lower mid cap name. I think it was 2019. And it was like, oh my God, this is an insane amount of money. I don't know what's going on. It's like unbelievable, which it is. Not to say it's not. But over time, you start to get numb to it. It just becomes trades. But the sizing, the way it typically works is I don't go into trades with the idea that I want to make 100 grand on the trade. Let's kind of erase that. Let's go from 1,000 to 10,000. If I'm making $1,000 per trade, right? Or I'm making 2,000 per trade. I don't wake up one day and say, I want to make 10K per trade or I want to make 20K per this trade. I say, okay, I'm making 1K, I'm making 2K. Let's flip it. I can't control what I'm making. I can control what I'm risking. I'm risking 500 to 1,000 per trade. Some trades go to 1,500. Some trades go to 2K. It starts to adjust. Now, every time I've had my first big swing at a big, big profitable day or week, it didn't happen planned. Like I didn't go into that day planned. It was, I've been trading well. I have a cushion. If I find a good A plus setup, I'll risk, instead of risking 2K, I'll go to 5K, I'll go to 6K. I go into a trade, I risk 6K, it works out great, phenomenal. Now, just because I risk 6 grand on one trade after risking 1,000, 2,000, does not mean the next trade is also 6 grand. Now I immediately downsize again and I stay in the 1 to 2K mark. until I find that good opportunity again. So I keep doing that for a little bit until I start to get more comfortable, and in turn, until my dynamic risk can start to adjust, until my P&L can start to reflect, and until I can see that I can handle that. And what I mean by handling that is if you're trading and you're making 1,000 to 2,000 per trade, and you immediately are now up 10, 12, 13 grand, you have to understand when you are in that new position, your risk is massive. Any P&L fluctuation is new to you. Naturally, as a human, your emotions are going to be all over the place. You are going to be more fearful. You are going to be more excited. You're going to see your P&L go from 11, 12, 13, 14 grand, and you're not going to be able to think straight. And I think those are the times where you have to start learning to disconnect from the numbers and just look at the chart, right? So for me, once again, it goes down to how I'm trading, what that setup looks like, and then ultimately just disconnecting from the numbers and trading the chart and not my P&L. And I think that's the hard part to get to because, realistically, I'd be lying to say that, I'll go into a trade with 800 or 900 contracts and I won't subconsciously know how much I'm up or down. You see the price. So but it's still trying to just look at the chart objectively and say, okay, I'm in this position. Does this trade still look good? And then I think the other element to it is when you're taking those trades is realizing like, if I'm taking this trade, I am risking 20 grand. You mentally go into that trade knowing you lost 20 grand already, right? So when you start to adjust with position sizing, because those numbers start to impact you so much, if you just go into it and say, okay, well, I'm going to lose 20 grand. You take the trade. I lost 20 grand. You put your mental stop where it is and you follow it. You'll have moments it works out. You'll have moments it doesn't work out. And a lot of times, even some of the big trades that I posted online that you guys see, I don't go into a day, guys. Like I don't go into any single day and I don't go and say, today I'm going to make 100 grand. No, today I'm going to risk maybe 30 grand, maybe 40 grand, maybe 50, depending on the day, the trade. It works out. Wow, it worked out. If it doesn't work out, I already knew what I was going to lose. The amount that I was going to lose, obviously, is the number I was willing to risk, and you live with it. I think it's when people trade and they are expecting themselves to make money on that trade or day or session, whatever the case is, and they go into a trade immediately hopeful that I will make money. It goes back to what I said as point number one. We can't control what happens in the market. You can't control it. I can't control it. Not a single person can control it. Go in and look at what can you control. I can control that. If I take this trade and obviously exit where I'm supposed to exit, I will lose 20 grand. You go in with that control element. That's it. If that trade turns over a profit, great. If it doesn't, what happened? Was it a good trade? Was it a good risk? Yes, it was a good trade. I risked well on it. Everything made sense. It didn't work out. Shit, you live with it and you move on.
Before we wrap up, there's one question that we have there, which is a few people in the chat have sent as well. And it kind of goes off the back of, similar to the last question as well. And sorry for everyone who's been throwing questions in the chat. There's that many. We will have Umar back at some point, I imagine. And me and Umar do have to sit down and do our Chart Fanatics episode, which we will do when we're in the same city in the coming months. So keep an eye out for that. And thank you for your patience on that. But we took a lot of time from Umar today whilst he's on his trip. So I do appreciate that. But the final question, and I think this is a good one because it's universal no matter which part of your journey you're at. And it's how do you look to ground yourself after taking, and I put losing trade, but other people did mention a win as well. Like, how do you control those thoughts? The if, but, or I could have done this. Like, how do you go about grounding yourself after taking a loss, a win, significant loss, significant win?
It goes back to my point that I said early on. Increase your time horizon, right? So if I take a trade today and I lost money, I don't have 30 days to trade. I'm not going to get locked out of my account in 30 days. I'm not going to get locked out, in the next 2 months. I can be in this game for as long as I choose to, as long as I manage my risk and as long as I stay alive. And the way I stay alive is managing my risk. So if I take a trade, and trust me, I have had so many days, like I kid you not, so many days, and for anyone that understands options, put this in context. I've had days where I've traded option contracts and I've probably made 200 grand or 250 grand. And if I held that same trade for another 10 or 15 minutes because that trade rallied or that trade dumped, I would have added another 100 or 150 grand in a span of 5 or 10 minutes. I've had so many days like that, right? And the reason I'm saying that is because the market is not going anywhere. That's something I know, I've accepted, I've seen it. And I think because I've been in this space for a really long time, I've seen it over and over and over again. So I'll have days where I lose money. I'm like, shit, I lost money. Oh, how do I be better? Okay, what did I mess up? Was it anything for me to even be better, or was it just a bad trade? Oh, it was a bad trade, didn't work out, live with it. I've had days where I left a lot of money on the table, like a lot of money. Like if you guys want to understand the amount of money I left on the table, I'll give you guys an example. You guys see PLTR, right? I had a lot of shares of this name. I bought at 9, I bought at 13, I bought at 20. I bought a shit ton of this, like, I mean, a lot. I sold most of my shares at 65, then I sold the other most around 70. This is a couple of months ago. PLTR today is at like 180. Didn't touch it again. I left an enormous amount of money on the table. Does it sting as a human? Yes. Do I know that there's other opportunities I will leave money on the table and I will be able to capitalize on? Yes. Shopify, you go back to Shopify in 2017, 2016, I bought a ton of Shopify. I sold it 2 years later, Shopify rallied, right? There's so many different names from a long-term point of view, from a day trading point of view, from whatever point of view. The point I'm trying to make is the market's not going anywhere. And I think the moment you instill that in your head and you really understand it, and you're like, shit, I missed a great trading day. Well, I have 10,000 more great trading days or 1,000 more great trading days if I choose to. Stay alive. So if I miss one, it doesn't matter. Now, when I used to trade, the first few years, for example, and I know a lot of traders have this, I used to hate weekends. I used to hate holidays because I didn't want to miss a trading day. Now I don't care because it's like, well, the market's going to be here on Monday. My life is not going to go anywhere. So let me enjoy what's in front of me and not become so obsessed with, waiting for Monday or waiting for the next trading day. And I think once you realize that truth, trading starts to become a little bit funner and easier to deal with losses and also winners.
Definitely. I hope people were listening, taking notes, and really understand as well. I think one really important thing that you mentioned there as well is that there's always going to be another trading day, but there's also to think that we will capture the meat of every single possible move that ever happens in the market. Because as long as, in your career, if you even do that a handful of times, that's more than enough, right? And I think it's just our human psychology of wanting to capture every move, especially if we were in it at one point. And I know one of our team members, Josh, feels that pain with Palantir for sure. I know he never forgets it. Umar, really, really appreciate you joining us today. Thank you so much for taking time out of your day to be here on the first live stream. It wouldn't have been right to do it without you, in my opinion. And hopefully we'll have you back again. And thank you again, man. Thank you for joining.
Looking forward to it. Thank you so much, Riz, and excited for the future of this channel. Definitely. Thank you, guys. Thank everyone for joining.
Thank you, man. Take care. Have a good rest of your trip.
You too.
Guys, thank you. Thank you all for taking part. Sorry again for sending all your questions. I managed to try and get as many as I could, when we could. But I'm sure we'll have Umar back again. Huge thank you to him. Huge thank you to all of you. And what an incredible wealth of knowledge. What an incredible, a verified 8-figure trader, someone who's been in the game over 10 years and has been through that process, been through the process of scaling the account. And thank you for putting up with me as we're getting used to live streaming. Someone asked a bunch of times, the same guy, I don't know if his message will come up. The same guy said, why are you sweating, Riz? I said it at the beginning. My loft is like a sauna. Yeah, I can't open the window. Or I could, but those will fall. I don't have an air conditioning, right? Deal with it. What does it matter? Don't look at me. Don't look at me. What is it? No air conditioning. What do I got a sound for that, look. I got a sound for it, right? For the dramatic. Yeah, I got a sound for it. Yeah, but yeah, I can see I'm shining. I can see it right here. Why'd you have to point it out? You kept saying it, right? Umar, I appreciate you, man. Thank you. Sorry, I didn't realize you were listening still. But yeah, no, thank you for joining, man. It's a huge pleasure. Huge pleasure. A massive honor, as always. But everyone, Remember what this is all about as well. Obviously, ask your questions, of course. Of course, ask your questions. Drink some water. I've got some water. I can't. You're watching too closely. But obviously, ask your questions. But remember, what's so important is that you really take on board and reflect on what is being said, right? Buy a diet. Damn, I'm getting scolded. For this day one. I can see why it's so difficult. What else have we got? I don't know what else we've got here. We've got an air horn. I need to work on these sound effects as well. But yeah, guys, like, remember to reflect on what's being said, because that's what matters the most. That's what matters the most. What matters the most is that you reflect on, compare what is being advised and what is being shared from their experience. People who've been trading 10 years plus, people who are in the position that you want to be in. Just remember to reflect on that, because at the end of the day, that's how you're going to realize and really connect the dots of where you're at and where they are, right? And the things that help them more than likely can help you. Not everyone's journey is going to be the exact same, but there are so many correlations and so many things that you may hear. It might not connect instantly, but through your continued experience, that bridge between that knowledge and that advice and your experience will happen, right? And that's something I've noticed within my journey as well. Don't worry, giveaways I'm going to be announcing towards the end. So don't worry. We are going to do that before we go. But we will start to announce them before the end. So yeah. But we do have our next guest coming up very, very soon. Very, very soon. I'm very excited for it. I know the mic levels, I was trying to work on them as we were in there. I hope they're a little bit better now. I know the Undertaker thing's great, right? It's for when we hit stop loss. If we hit stop loss, that's what's going to happen. Or there's another one that was a request from one of our team members. I'll do it now before we have any more, verified incredible traders on and we really embarrass ourselves. But this is the one from one of our team members. He specifically requested this. Yeah, that's what he requested. That's this level of maturity that the team have behind the scenes, right? It's terrible. Absolutely terrible. Imagine I did that when I have Jack Schwager or Lance Breitstein or Umar Ashraf on stream. Imagine that. That is insane. Never. We can't. I need a towel or something. Someone can throw some water on me. Okay. Guys, it's time. It's time again for our next guest. Our next guest, someone who is absolutely incredible when it comes to trading. Someone who has really set the levels of what is possible within trading. Someone who is going to feature in the next Market Wizards book. It is the one and only Lance Breitstein, a verified 9-figure trader. He is joining the chat right now. I did that a bit prematurely in terms of my big intro, so apologies about that, Lance, but we're going to throw you up on screen here. You might not be able to see me when it comes to the Google chat because my camera is being used on the live stream, so apologies about that. But it's incredible to have you with us today, and I truly do appreciate you being here. How is it going, Lance?
It is going absolutely wonderful. So happy to be here. Although I wish it was in person, truthfully. But hey, I'll take Riz any way I can get you.
No, I appreciate it. We will be doing some stuff in person. I know, and I have no doubt about that. I'm just going to add your name in here so that we have you correct. There we go. I'm learning the live streaming business as we go along, Lance. But again, as I was just saying when you were joining there, verified, I can say it now, I hope, 9-figure trader. Now that we know that you're going to be in the next installation of Market Wizards, which is absolutely incredible. Huge congratulations once again, Lance. I don't know anyone who really deserves it more. Yeah, I guess we can start there. How does it feel? How does it feel after all these years of trading to actually then be highlighted in the next Market Wizards?
Yeah, thank you so much. Yeah, I've been trying to hide a lot of my P&L, as you know, for a while. And I knew that with the Market Wizards, it would come with, okay, they're going to go through all my statements. It's all got to be public, which was pretty much the only condition I would ever, be willing to share that, just because to me, the greatest honor and the ultimate accolade for my career is to be in the Market Wizards. After that book series, for years I've attributed that series to being the series that made me fall in love with trading. So it is so surreal. And sometimes you start your career and every struggle, every mountain, you blink and you're on the other side. And it wasn't an easy journey, but it is definitely surreal to have achieved what I did. So thank you.
Yeah, definitely. I can only imagine. And like I said, no one really deserves it more from my, well, I know you know a lot of incredible traders as well. And I think a close friend of yours is also being highlighted in. Someone actually asked that earlier, get the short beer on. I said, hey, I've got to wait till Lance gets on here and we'll put him on the spot. We'll put him on the spot together.
Yeah. And Lucas is like, I mean, he's the real GOAT. He absolutely has crushed every accomplishment that I've done. I am nothing but a mere lowly day trader, a little gnat and fly on the wall compared to the great Lucas, but happy to call my friend. And, it's all the people you would think all these top traders could just be, arrogant, stuck up assholes, but whether it's a Lucas, whether it's a Qualamagi, pretty much it's universally, even a Kyle Williams, a Steven Dux, all these guys are just super, super nice, super down to earth. And it's wonderful when you get a community where a lot of these guys want other people to learn, want others to succeed. And they're all amazing people. So I can't wait to read their stories the same way I'm sure you're excited for it.
100%. Lance, I really want to ask you a specific question to go off. Well, I guess I already did ask you one, but to officially begin, because we had our podcast episode, which was incredible. I've been following your Twitter for a very long time, and you've really given a lot of help, resource, advice, and insights and lessons across the board. But there's one thing that I would say that stands out with yourself is you've come from a really professional sort of environment, a team environment, a community environment when it comes to traditional prop firm. And yet when over recent years, we've seen a huge rise in trading on social media, but there's a whole difference. There's like a whole different league that a lot of traders, especially a lot of people who are viewing right now, probably have never seen insights to. So I know that was a long way to get to my question, but I wanted to ask, what is the key difference between traders you observe as coming in to trading through social media and funding firms like these, funding firms, compared to, the 7, 8, 9-figure traders who you've interacted with and been in the traditional prop firms?
Yep. Yeah, that's a great question. And I think that is one of the things that makes me unique is having gone through just the traditional brick and mortar proprietary trading firm. My employer was Trillium for over a decade. And you see a different side of it, I'd say. And I know this might come off wrong, but I don't mean it this way. You see a more professional side of the business. And I think what it really emphasizes and stresses to me is that people that want to succeed at this business, you need to attack this job like it's a true profession. How can you treat this like the hardest, most difficult job and take it with the utmost seriousness? And I always make the comparison. How can you train like an elite athlete would train? How can you mimic the routines of a LeBron or a Kobe or a Steph Curry? And so I think many people on the retail side, they get sucked in by some of the marketing, the appeal of get rich quick, when in reality, it's like, no, this is a skill. You need to get really high up on the learning curve to make money at this skill. And so that means attacking it like, what time will I be at my desk every single day? What day will I do reviews, or how long will I do reviews until? And how can you structure a daily routine that leads to success? And how can you sustain that routine, not just over a couple months, but years? And I think many people on the retail side, they get these false expectations, whether it's through funded trader programs or just through general social media. It's common psychology where no one's advertising these struggles. No one goes on Instagram and rather than their highlight reel, they're not posting, look how depressed I am, look how sad I am, look how frustrated I am. Look at me on my 15-day loss streak. Look at me at total rock bottom thinking I'm never going to make this. And so when you enter from the realm of the social on the retail side, I think a lot of expectations end up not really reflecting reality, of which this is an incredible job. It is given so much to myself and many others, but it is a very difficult job that takes a level of professionality I think most people don't expect.
Definitely. There's actually a question someone submitted to me before we went live. I asked just a few groups that I'm in, and there was one that stood out to me that really I thought would be really great to ask you. And it kind of goes off the back of what you just said in terms of that difference there, which is what's a habit outside of trading that's had the biggest positive impact inside your trading?
Oh, I mean, hands down, immediately sleep. And I know I sound like a broken record to people, but as I told the story, once I started to do more of a daily report card and everything and start to better reflect on my data, and I was tagging a lot of trades and I was doing a lot of data analytics, the minus, obviously, market opportunity is important, but I have no control over market opportunity. So, of course, if there's this really hot market, I'm going to do well. But again, I can't control that. As far as controllable variables that had the largest impact on my P&L, it ended up being sleep. And what I found was that all of my really big losses came from being tired, came from being sick, came from being hungover if there was, a happy hour event or a work dinner or something like that. And so especially now with so many amazing health podcasts and people like Brian Johnson, Peter Attia, Huberman, emphasizing how much sleep helps our resilience, our willpower, our learning, our processing. You make better decisions when you're well slept. And so many traders I meet with at meetups or conferences, they will brag to me about how little sleep they get. I remember the meanest I've ever been to someone, and I don't think I tend to be too mean of a person, but I will admit this time I was mean and I kind of regret it. But there was a trader bragging to me that because he works a full-time job and he still puts so many hours into trading, he only gets like 3 hours of sleep a night. And I'm like, in no way should that be a brag. You are impairing your health. You're impairing your learning capabilities. You're impairing your decision-making capabilities and your emotional resilience and everything else. So it's like, I think if you're serious about this, you need to treat your performance like you're a pro athlete. That includes being mentally centered when you're there to trade. That includes getting good sleep. That includes eating healthy so that you're not sluggish. That includes going to the gym. The other thing that's funny too is when you're not healthy and you're not well slept, you also just get sick way more. And just if you're a profitable trader, just the cost in P&L from being sick and missing, I don't know, I think unhealthy people can easily be sick 2-3 weeks a year. That adds up. That also adds up if you're trying to learn and you miss out on essentially 5% of the work weeks because you're just not well rested.
It's interesting. Would you say there's an element of being in that professional environment that has an element of accountability that brings these sort of factors to the surface versus trading alone, in your bedroom?
Yeah, no, that's a great question. What I find is that any time you have external accountability, because we are these feeble, weak-minded humans, for whatever reason, that really works. I don't think most people will work out as hard on their own versus if they have a trainer. I don't think most people will follow a goal as well unless they've made themselves accountable to others. And the beauty of working at a brick and mortar trading firm is that you are accountable to your mentor, you're accountable to your group lead, you're accountable to the risk manager. And so all these people are seeing your progress. They're helping you build structure. They're helping you remain within the guardrails. And so that doesn't mean that retail is doomed. What I really challenge retail to think about is if these are the best practices on the pro side, how can you best emulate them and recreate that environment on your own? And that's how I started to emphasize the importance of trading pods to the retail traders, because every trading firm, for the most part, not every, but most top trading firms, they really put you into groups. It accelerates learning. It increases the opportunities you see. It allows you to save time on different projects, share resources, all this different stuff. And most traders operate alone. And so my challenge to the average retail trader is like, yeah, you don't need to join a firm. Some of the absolute greatest traders I've ever met in my life, all on the retail side, people like Lucas and many others, incredible talent on the retail side. But my challenge is how can you emulate those best practices, increasing your accountability, having someone risk manage you potentially, having people share their best practices, having people share catalysts, have people on a Discord calling out different opportunities. That's what I really think the message I try and impart is.
Definitely. And I really want to actually point out, going back to our original question about the habits outside of trading, you've actually done some incredible podcasts with health experts that you've got on your YouTube channel, and that's in the description, everyone. So make sure you go check that out as well. Lance's YouTube channel, there's a wealth of knowledge on there, not just trading, say, specific, but it's obviously relating to trading when it came to health as well, which again, a lot of people are sleeping on, as you mentioned. But, you know, I think that's very important, as you mentioned, in terms of trading pods. Would you say, is there anything that you've sort of seen when you've interacted with these retail traders who are now close friends of yours, who've had incredible performances? Is there anything specific they did to create a pod or create that sort of sense of community like that?
Well, I think for most people, even though I think traders tend to be more on the introverted side, if I had to stereotype, I think most people recognize that trading can be quite lonely, trading can be quite difficult, and I think what everyone starts to realize is everything is so much easier when you're doing it together. Even if it means commiserating and venting during the bad times, even if it means celebrating the good times, when you operate as a team, you have such a high level of resilience versus otherwise. And so I think a lot of these traders, they started to network both out of camaraderie and also for learning. And what's so cool is I've seen traders link up from totally different styles and they learn each other's styles and expand their playbook. I've seen traders link up with the same style and they just increase their strengths, right? So there's so many different ways to do it. And that's also, I mean, I guess a shameless plug here is I'm on the board for Traders for a Cause, which is a nonprofit that helps traders learn about trading, network, while also raising money for charity. And some of those regional meetups are incredible. The annual meetup, which is going to be in Miami in February, it's just the mecca of everyone from total newbies to total legends like Lucas, like Qualamagi, and all these others that show up. I mean, Jack Schwager has spoken at a Traders for a Cause conference. And so I think it's the people that I've come to know, they've put the work into building these structures for their own without even knowing they're doing it, right? So many of these retail traders, they don't know that they were emulating the best practices of a pro trading firm. But I think most people that achieve a lot and are high performers, all the principles remain the same. And that's even beyond trading. If you study high performance at anything, you will find the same commonalities. And one thing I love is, I don't think this name will be familiar to most of the audience, but I've been on a huge Alex Hormozi binge, and he's pretty much the king of like digital marketing and business scaling right now. And just listening to some of his podcasts, every single thing he says applies to trading so much. And he talks about you need to find the one constraint and do 10 times the intensity on that one constraint. And stuff like that, it's so true for trading. Like people will get lost in all this minutia when it's like, okay, if you had to double your P&L, what is the one way you would do it to double your P&L? And how can you apply like superhuman effort to systemizing and executing on that goal? And I think it's such a good frame because these principles are universal.
I love that. And it's actually something you did discuss in our podcast, actually, in terms of identifying a weakness and focusing on that versus just trying to do 10 different things at once and spreading yourself so thin. It's a powerful concept.
One quick thing, by the way, Riz, you want to know what I love? So I mentor a couple traders. I mean, I help S&B Capital, which is a whole firm of traders, but then a couple traders outside of it. And a trader who's on the newer side emailed me following one of our meetings, and we identified a series of problems and weaknesses and in his trading that would have the biggest impact for him to get to the next level. He then sends me a follow-up update. And within that was all of his reflections on the different solutions and how he's going to execute upon those solutions. And when I see the gap between those that make progress and succeed and those that end up floundering, it's one, can we put in the time to identify the problem accurately? Then that's just step one. That's the easy part. Like, okay, I identifying the flaw is easy. Then you really need to put in the work to figure out, okay, what's my solution for this? And most people don't figure out the solution. Like I see Twitter posts all the time. Oh, I lost an ABC because of this reason. Okay, like I'm happy you reflected and figured out why you lost and why it was a bad trade. But what's your solution to not make that mistake again? How can you be more detailed and nuanced in your trading system, and how can you improve that? And so much of trading is you find a weakness, you propose a solution, and build a system of how you're going to incorporate that solution, and then you execute and then iterate whether that works or not. So even simple habits like, okay, Lance says sleep is important. I know that at bedtime, I'm like most people, you fight with Netflix and you fight with books and you fight with doom scrolling on social media. And so then it's like, okay, that's my problem. How can I build a better system of making sure I'm not stuck on my phone when it comes time to bedtime? Maybe that means, okay, 9 p.m. my phone goes away and I'm going to switch to Kindle and otherwise just do kind of relaxing activities and no phone, no markets. And you start to build those systems to make it a habit and behavior change that leads to results.
Definitely. There's one question that just popped up in the chat there, which I think is something that you have talked about before as well. But it says, Lance, what's your pre-trading routine and how do you keep yourself accountable to it?
Sure. So I guess, so every morning, which is, I hate that I'm even admitting this because I wish I didn't. Like in an ideal world, I would love to have I wake up, in beautiful, peaceful, out of beautiful, peaceful slumber, birds are chirping, the sun is and I go for a nice coffee, a light walk, and then finally check the markets. But of course, I'm human. I fall to my base psychology all the time. The reality is the second I wake up, I'm like every other human where it's like, oh, what texts did I miss? What emails did I miss? What's the market doing? Do I need to worry about any exposures? Do I need to worry about any headlines? And you get into this flurry of chaos, but that's the reality of what I do. So first step is immediately upon waking, I kind of just make sure nothing crazy is going on. It's just still, I guess, the paranoid trader in me, where I'm always checking the headlines. So then from reading the headlines and what's happened overnight, take this morning, right? Like Bitcoin and Ethereum has been breaking out. Ethereum's been making an epic move. Both Ethereum and Bitcoin were ripping last night. But then they paired a lot into the open. So then I'm watching some of the Ethereum and Bitcoin related names. So I'm immediately thinking of like, okay, what do I need to be watching today? What stocks recently had earnings? So like Palantir, NBIS, they had recent earnings. They've still been trucking. So I start to piece together my watch list. It's based on the news. It's based on what's doing funky moves like Bitcoin and Ethereum, recent earnings or news stocks that have been really, really strong, technical patterns that I might be interested in, what's really overbought, what's really oversold, what's consolidating nicely. Fannie Mae is another example of a ticker I was watching this morning. And so I build my little watch list. I'm also preparing for like, okay, what earnings are after hours, any events I need to be aware of during the day. And I have my watch list. And then ultimately, I'm looking for setups within my playbook within that watch list, while also keeping an eye out for any breaking news headlines. So I'd say a lot of that pre-morning prep is just having a feel for like what stocks have the highest probability to set up within my playbook, while also making sure I'm as formed as possible, right? I don't want to be blindsided. Oh, Lance, you have a position in a couple stocks and there's a Fed meeting or there's a big economic event or there's Trump speaking on something, right? Like I need to make sure I'm prepared for the event calendar, but also know like what's moving and why. And then I'm largely just looking for setups within my playbook.
I love that. Is there a specific number of stocks that you can have, in play at the same time, or is it all dependent on opportunity and what's happening in the markets?
Oh, sorry. One more thing I'll add. So so as far as the number of stocks I'm looking for, it really depends on the markets. In my personal opinion, this year's been super active. Yeah. So there's times like you can be looking at 10, 15 stocks, even 20 stocks, right? And some of the tariff craziness. So it really depends on market opportunity. There's times where I might have 0 to 5 stocks. But I would say you always want to be adapting to what the market is presenting, which reminds me of the one part I forgot to mention in that. So I'm less good about doing this now because my trading's, like a smaller portion of like my priorities these days with nonprofit work and the course and everything else. But so what I would generally try to do every day that I'm trading seriously is also do a daily report card and set up the template. So I've shared this freely online. I think I have downloadable templates somewhere online. And so as part of that daily report card and that pre-open routine, I'm assessing what you just described, Riz, which is how opportunistic is this market? Like right now, it's been pretty opportunistic. There's a lot of stuff, Figma IPO, Circle IPO, Fannie Mae moving, earning stocks, all this stuff. So the amount of opportunities, but then I'm also, like I said, with the sleep and everything else, I'm using my mental state as an input to that as well. So last night I didn't get great sleep. I kind of had I had a little like barbecue last night, so went to bed a little bit wired, a little bit later than I otherwise would have liked. And so okay, today is potentially a higher opportunity today. I'm a little bit under rested, so I'll use those two inputs and then create how much risk I want to risk each day. And also be cognizant of like, okay, what is my one goal for this trading session I want to improve upon? As part of my daily report card, there's always one goal that I want to improve upon. And so I'm trying to just prep my mind to be conscious of that. Okay, Lance, don't fight anything front side, always wait for the turn. So then once I've done that part of my daily report card, I've built the watch lists, I'm prepped on everything. Now I'm ready to go. So sorry, I forgot that. Had to
no, I know that's so important. I know it's something that you do nail home a lot. And in terms of like quality write-ups, as you mentioned earlier with that person that you work with, and is helping and improving, that is something that's very, very important. This is an interesting one. This is a very specific question here, which is what exact metrics do you look to track after a trade to evaluate performance?
Yeah, that's a fantastic question. So I talk about like tracking data and everything else. So in my view, there's kind of two types of data tracking in trading. And I'm not sure I've actually ever delineated this and spoken about this in the detail I probably should. There's really two ways to use data. You can take data on setups. Like, okay, what happens? Let me backtest. What happens when a stock is up 3 days in a row, greater than 10% each day, and A, B, and C? So you can backtest the data of the actual setup. But then the other way to track data is you can track the data of your actual trading, where it's not about the setup, but like, okay, what percent of days am I green? What percent of days am I red? What percentage of trades make up X amount of my P&L? What percentage of my P&L do I make in this playbook? What percentage of my P&L do I make in this other playbook? So I tend to not be super, super quantitative with my trading setups. I don't do a ton of back testing with the actual trading data because so much is I have a lens of technical analysis. Where I do the bulk of my actual data analysis is studying my own trading. So that can entail so many different variables. I've found all sorts of nuances just simply from tracking that data. One simple, obvious one that I've shared sometimes is the day before vacation, I would be mentally checked out. I would let my guard down. Some of my biggest losses and dumbest, easy lost money would be from the day before vacation, letting my guard down. Another thing with tracking data is knowing like, okay, is this type of setup working better or worse than it usually does? Right now, we've been in a very momentum heavy market. We've been in a very bullish market. For the most part, I want to make sure more and more of my trades are going with the trend and are being longs right now rather than shorts. If I am shorting something, I want to make sure it capitulates. So one view I've had recently, just from observing some of what's been working and what's not, is overall, the market is bullish. So most market things I want to be long, but then a lot of the froth, like I felt we hit a peak in frothiness maybe about a week or two ago with some of like the Bitcoin treasury stocks, like so much like the Open Door and Eric Jackson, which was just asinine. When you saw, there was the day where we saw Coles go up 100% right into the open on epic 100x volume, which was a massive short opportunity. And all these other high short interest stocks were just ripping with it. That to me was like, oh, wow, we've probably hit peak frothiness. And so that's when I started to say like, okay, I think in the frothy stuff, not the general market, but the frothy stuff, I think we're going to start to lose momentum on that. And a lot of that stuff you can fade more aggressively. So then we got the Figma IPO shortly after that. The Figma IPO started to follow the Circle textbook, right? The Circle IPO, it did the same setup intraday. So you can trade that. Like it did, Figma and Circle both did the quintessential IPO play. It had an opening drive, a shallow counter trend. We consolidated, then we broke out into the close and had overnight momentum. All that was textbook. But then what happened is my belief was like, whoa, most of the froth is starting to fade off. I don't think this is going to go to 200 or 300. I think now that we already went from like it priced, super low again and was already at 150 by the end of the first day or something absurd. It's like, okay, I'm going to be more aggressive and leaning into this short than I otherwise would have. So a lot of my data tracking is like not necessarily back testing, but studying in the present moment what's working and what's not, and my own actual trading patterns.
I love that. And one interesting question that was asked, and I'd love to get your sort of thoughts on the definition of the word that gets asked as well, which is after all the years you've been trading and all the success as well, do you still feel the need at any time to consult your mentor? And I think mentor is an interesting word because I think instantly most people would assume like trading strategy-based mentor. But I think in trading, and especially at the level that you're trading at, mentor could mean something else, So I'd love to hear your thoughts on that.
Yeah, I guess, I think how you frame that is pretty fantastic, Riz, because the truth is, I think we should all have mentors, and I don't think mentor needs to fit any one specific definition. Mm-hmm. So I've had the same trading psychologist, who's also just my general psychologist because he's just, clinical PhD and qualified to do all that stuff. And so much of trading in life is interconnected anyways. So I mean, I still meet with my trading psychologist weekly. I still speak with traders that are far better than me. I have mentors on the health side. I have mentors on the sleep side. So I have mentors, even people like Mike Bellafiore, who's been a great mentor of mine as far as business, as far as trading. So I think the learning never stops, and I'm always seeking people that have expertise greater than mine in areas I'm interested. Last week, or no, it was like maybe 2 weeks ago. 2 weeks ago, because I'm so fascinated by the content space and businesses and scaling now, like I paid a lot of money to seek out Alex Hormozi and learn from him. So like, I think everyone should have or strive to have mentors in anything they want to maximize their performance at. Like so many times mentors, one, have perspective that you don't when you're kind of in the whirlwind, and two, have expertise that can just way shortcut your learning. And for those that are curious, if you Google the One Lance B, how to find a mentor, it should pull up a thread, a Twitter thread I've posted on how to find a mentor, which I think is so important because so many people just say, "Oh, Lance, will you mentor me?" And it's like, dude, like in what world is that going to work? And I think everyone should have a mentor, but most people haven't put in the time to think about, how can I actually find one? Why should someone mentor me? Why should someone take their time out of their busy life and try and provide value to me? And one of the things I talk about in the post is you need to find a way to reciprocate value or figure out what's going to be useful or meaningful to them and why they should do this. Another part of that thread is how can you find a personal connection to help like that bond, right? So if someone were to reach out to me and they were to say, "Hey, Lance, I'm a trader at Trillium. I have 3 quick questions for you." The odds of me answering that question from someone at Trillium versus a random person is 1,000x higher. If someone were to say, "Hey, Lance, I'm from your same hometown. I went to your high school. We have these 7 mutual friends," the odds of me answering that email 1,000 times higher, right? And so I think it's worth putting the thought into like, wait, what are the stuff I care most about? Do I have mentors in those? And if not, what's the best way I can find someone that's going to help me just kind of shortcut my learning and just perform better in this field? Like everyone should have mentors, or at least someone, even if it's as simple as, life is hard, man. Like life has its ups and downs at the least. And most men are just awful about this, right? Mm-hmm. at the least, most men should do their best to at least have someone they can speak to. Even if you're struggling at trading, you at least want like a couple friends, whether they're traders or not, where you're like, man, dude, like, hey, I know you don't trade, but I've just been getting I almost dropped enough bomb. My effing ass kicked. I've been getting my effing ass kicked, dude. Like, I'm so frustrated. Like, can we just grab a beer? And can I just complain to you about all the money I've lost, even though it won't make sense to you? You know, so I think there's a lot of different types of mentorship, and you do need to put effort to foster those relationships, but they come in handy, especially in a lot of ways you'd never imagine. I mean, I've been shocked. Some of these guys in the trading world, whether it's the retail side or even people like Bella, they're just so good at networking, and you never know where it's going to lead. And especially if you're someone that's just hungry right now, you're trying to get yourself the most opportunities possible. For me, I tend to be more time constrained, so I can't network. But if you're like 23 and you need opportunities, you need to meet people, you need to expand your network, you want to be putting that time in, and it's uncomfortable, but it will pay dividends eventually.
Definitely. No, I couldn't agree more. And I think it's something that, again, the general community, especially as we started with that sort of divide on the sort of more social media side, automatically assume a mentor means just strategy, right? But there's so many elements to what a mentor can be, and what a trader should get a mentor for as well, not just for one element, but also multi-element and multifaceted. But most of all, you know, we should always rely on people with actual experience, and results are very, very important. Off the back of that, though, is actually interesting, kind of leans on that. But how do you regulate yourself to not transform your winning streak and good performance into an overconfident loop or losing streak?
Yeah. So, and this is tough for people to process. At the end of the day, we want to bet most in line with the mathematical expected value as possible. Meaning, in poker terms, like, all things held equal, I want to bet more when I have aces than when I have pocket tens. I want to bet more with pocket tens than when I have 7-10 or something. So as a general rule, to truly optimize over the long run, we want our bets to reflect expected value as closely as possible. Obviously, we never truly know the expected value of anything. It's just our perception from data, from backtesting, from whatever. And when you have positive streaks or negative streaks, those don't factor into the expected value equation, right? If there's a setup, let's say Bitcoin's breaking out or something. If there's a setup in Bitcoin, the market doesn't know whether you're on a 5-day winning streak or a 5-day losing streak. The amount you bet on that play and how you trade that play should be exactly the same, regardless of whether you're on a winning or losing streak. That's easy to say, though. The truth is, we are all weak, feeble-minded humans. That psychology is a reality. And so what I really impress upon people to do is, most people conceptually understand that, okay, I want to bet with expected value. And I think a lot of times we know when, okay, I'm in a losing streak, Bitcoin's breaking out. If I'm normally going to bet 100K risk on this, man, it's just been so tough lately. I can only bet, I'm down 100K drawdown. I'm only going to bet 20K on this instead. And so you're letting your performance drive that trading decision. And so then if Bitcoin does end up going, or the setup does end up going, you're still in a drawdown because you didn't bet the appropriate amount that you would have otherwise. And so then what happens on the other side of the spectrum is, some people that are on a winning streak, they say, oh, this setup isn't that good. I should only be betting 20K, but because I'm on such a win streak, I'm going to bet 100K. Then when it doesn't work out, they wipe out all their gains. And so, like, we are humans. We do fall for the hot hand. You know, we think we're so good, we're never going to lose again. And we do also then get super cautious and conservative when we're on the losing streaks. And so being aware that we make these mistakes, in those moments, you want to try and be as close to optimal as possible. But now, being a realist, the other thing I tend to say is, you never want to bet so much that if you have a string of losses, it's going to affect your psychology. So a lot of traders are trying to grow their trading, And that's good. You don't want to stagnate. Assuming you have positive expected value, you do want to prudently and gradually grow. And some people do it too aggressive. And what I always tell them is like, definitely, prudently increase your size, but never bet so much so that if that trade goes wrong, it's going to really mess up your decisions. And so I really am trying to build an environment where traders are making the right decision on the setup and they're not letting those outside influences affect them, because that over the long run will truly optimize your P&L.
It's interesting you mentioned about the dynamic sizing and the A+ setup, because someone's been sending this question in a few times, and now's the time that it correlates. And someone said, can you find A+ setups without engaging with the market or taking B+ setups, for example, or B setups?
So I would say yes, absolutely. There's a couple different views on this. I know some talented traders where they say, unless I'm constantly trading and involved in the market and have feeler positions or this or that, they don't have the same feel for the market. I don't think so. Part of what makes trading so hard, or any performance thing so hard, is ultimately we're not all homogenous people, right? People have different styles, they have different strategies, they have different psyches. People are ultimately different. And so anytime someone gives advice, there should always be a bracket that says for me. Anything I say is advice. Some stuff is conceptually probably more true than other stuff, but ultimately I'm just saying from my experience, what I believe to be true, yada, yada, yada. And so I know traders that absolutely feel that they need feelers and they need to constantly be engaged. And I don't want to discount that. I'm not personally like that. Like, I can definitely not trade and still judge the setup. But again, people are different, and I know people that are like that. So I think ultimately it's like you need to find what is right for you. And for so much of trading, there's principles, and I have strong opinions on stuff. And a lot of times, though, I always say, like, look, you need to make this your own, and you need to find what works for you, which is, to most people, the most infuriating response you can ever give someone, because it's not black and white. It's not, you need to do A and B. And if you do A and B, I can guarantee you these results. That's what most people want. But the truth is, sadly, that's not how the world works, where you need to incorporate this information. You need to apply it to your own situation and ultimately test and iterate, observe, and say, like, okay, hey, Lance, I don't think Lance is, a dumbass, but like what he said didn't work for me. And that's okay, And so I think a lot is taking in information from credible real traders, processing it, seeing what sticks for you. And ultimately, if anyone's pretty smart and sharp on this stuff, at least try to learn why they feel the way they do. Yeah. I think you always want to, like, that's kind of like the through line on some of that stuff.
No, definitely. And I think it's actually good to kind of expand on this slightly, which is in terms of that A+ setup, like, talking about tracking your edge and being able to, in a tangible way. So like, what does that process look like for you? How can someone actually track their edge and make sure that they're, constantly focused on where the edge actually is in the market? Is there particular softwares, or is it a particular viewpoint on the market? Like, what is it what does that process look like, do you think?
Yeah. So I think for most traders, as you get more experienced, absolutely not true for beginners, not true for newbies. It starts to become true at the intermediate level and definitely becomes true at the elite level. Mm-hmm. The more experienced, the more your best trades, a select few A+ setups account for more and more of your P&L on the year. I've found that true at every single trading firm I've ever worked with. I found that true with every single elite trader I've ever worked with. The really best setups, they just knock out of the park. Recognizing that sometimes the expected value on those is just astronomical and magnitudes better than your average day-to-day trade. And so what I would say is, like, if you're a beginner, you want to just be studying everything, figuring out just, God, what even works, what doesn't, like, I don't even know where to start. I'm so overwhelmed. Just study everything. Start to figure out the commonalities. As you get intermediate, you can start to say, oh, wow, like this trade's really working for me. As you get really good, you start to see that grouping and that pattern. And over time, because of that power law, you want to focus so much more of your effort on really studying, mastering, and maximizing those special trades. So I think as you gain more experience, you spend more and more time on those. And so recently there was this whole Twitter debate where someone took my easy money trades concept kind of out of context. And it's like, of course you want to bet big on the aces. Not every hand will be an ace, though, will be aces. And sometimes you don't get a lot of those. And that's where you still want to find like your day-to-day singles to help barbell that strategy. You want to find like your easy, nothing's easy, but your replicable kind of singles that then give you a P&L cushion to bet on kind of the occasional home run trade. And I think that starts to help people. Then as far as data tracking, I know this will sound like a plug. So I know Umar was on right before me and everything. So when I worked for a trading firm, we used internal software that was just all proprietary, yada, yada, yada. So since then, I've not really found great software. I've started to fool around with TradeZella, and some of the traders I work with or mentor, I've been like, hey, just get an account on here and do this for me. And it's actually been an awesome product. so there you go, Umar. There's your plug. And so anything I had on the proprietary trading side at the firm level, the truth is like the retail side from a software perspective, it's like, it's in some areas it's as good or just nearly as good. Like I don't want people to think, oh my God, working for a pro trading firm, it's just such a different league. It's like, the truth be told is like the retail side, there's a very good suite of offerings now in different software products, whether it's filtering, whether it's trade tagging, whether it's capturing news, whether it's automating stuff. There's a lot of good stuff out there. So nothing I ever did on the institutional side like isn't accessible now to retail traders. Like the TradeZella stuff is actually just genuinely super good. And but you don't need to spend or buy these products either, right? Like before my firm, Trillium, built that software, not that it's my firm, I just mean the firm that I worked at. Like I was just tracking stuff in Excel. I was just doing stuff manually, right?
Yeah.
That doesn't cost anything. You can find ways, especially with ChatGPT. Like I guarantee you there's some way to use ChatGPT to connect with your brokerage statements or to feed your broker statements in it, and it just have it pull all your data into an Excel sheet or just crunch stats directly from your brokerage statements. Like what stops you from uploading your trades each month and just saying, hey, ChatGPT, blah, 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 work this data, manipulate it into a way that I can just start tracking A, B, and C.
Yeah.
So like it's the level of accessibility nowadays, like this is worth emphasizing. And actually I'll then make a tangential point. The level of accessibility to the average retail trader is unparalleled. More than ever, anybody can trade, whether it's funded trader programs, whether it's a Robinhood account, anybody can trade. There's talk of the $25,000 PDT rule being removed.
Yeah.
Like if that happens, wow, we are in a golden era of trading accessibility, for better or worse. I don't know whether it's good or bad, but we are for accessibility. Like the other thing is the software is good. Commissions are cheaper than they've ever been, pretty much, versus calling up the phone, even just 15 years ago, right? And the other thing I would say is the level of free content that is out there, right? Look at what your podcast does, Riz. You are taking some of the best traders in the world and you are grilling them and opening up all of their brains for hundreds of thousands of people to see. Like that did not exist when I started trading. The best there was 15 years ago when I started trading was there was a little bit of Twitter, a little bit of stock twits. You had S&P Capital on the scene and not too many others. And now it is so saturated with some of the best traders in the world sharing just content openly. There's insane trade write-ups free on Twitter. Insane. I mean, I've been tweeting for 3 years now, right? It's all free tweets, right? And so now here's the paradox of that. All of that is great. But now my last Trader Lion presentation, because content is so good and so freely available, it's almost this endless funnel. And the one downfall, which is a huge one though, is you can get so caught up in this knowledge game. It's like if I'm trying to do a self-help book or something, or these psychology books, there's more self-help books than ever. There's more psychology books than ever. If I don't actually apply any of it, it doesn't matter. We know more about dieting and nutrition and fitness than ever in all of humanity. Why are we less in shape, less healthy, less happy?
Yeah.
It's not about more information for most people, right? Yes, it's freely accessible, but it's almost a trap at this point, because you need to find the couple nuggets of truth and just at some point turn the fire hose off and say, I need to apply this stuff. It's not about the keto diet versus the carnivore versus the vegan versus the that. What are the principles that make this true? Okay, I need to be burning more calories than I'm eating. I need to be going to the gym. I need to be avoiding, ultra processed foods. No matter how much I read, like, that's not going to make me lose weight. Reading does not make me lose weight. Applying and following the principles of these books is going to help me be healthy and lose weight. And so, yes, consume this stuff to help you as a guiding point. But there is no substitute for doing what Kuala Maggie has done, for doing what Greg Shabika has done, for doing what I've done, for doing what my mentor has done, for doing what Lucas has done, which is looking through 10,000, 20,000, 30,000 of the craziest charts and annotating all of them, for building these chart databases in Evernote or Notion, for just getting screen time, for studying or trading, for collecting the data. So that is the one catch, is there's all this information, but ultimately the same way we know about dieting and exercise and all this stuff, it's all useless. And it's just mental masturbation if you're not actually applying it and doing the hard work. Yeah. And it is harder than ever to turn your effing phone off, to get the F off Twitter, to get off YouTube and say, Riz, look, this is weekend entertainment for me. I'm sorry, I love you, Riz. I got to turn your podcast off because I have some back testing to do. And that is the stuff that moves the needle for people. And it's harder than ever. And I struggle with it, right? Because I'm human. We all are human. But the difference you can do in 3-4 hours of hard work, it's so huge. And I tweeted this yesterday on a Sunday. Most weekends, I am doing at least 3 or 4 hours per day of really focused work. And those 2 hours that you carve out on a Sunday, you can get so much done and it compounds so much, but it's not fun. It's not comfortable. It's saying on a lazy Sunday, I'm turning all these distractions off and I am doing the work that is going to help me elevate my trading next week. And that's what really matters.
Definitely that deep work. And then, it's interesting what you said in terms of like, we have access to the highest level of information almost now for free at our fingertips. And yet we're the worst, as a community, a global community, we're the worst we've ever been, right? And I think it's that element of struggle that's almost necessary to really lit a fire on people's asses to move. And it's those who are willing to really push themselves and, not give in to those basic desires and basic sort of comfortabilities,
Kuala Maggie's whole trading strategy, all of his videos, all of his streams have been online since I got online. I don't know when he first started. It's maybe been like 4 or 5 years, right? I don't know the view count on these. I would guarantee you the view count on all of those streams is above 100,000. What percent of those 100,000 said, oh, wait, I am going to systematically study what he's talking about, and I am going to go through my own version of the 2,000, 3,000, 4,000 charts and start annotating and doing the hard work. Yeah. I would bet you out of those 100,000 viewers, I would bet you maybe under 500. So maybe under 0.5%. And I would also bet you that if you don't do that work, all that stuff, it just doesn't matter, right? Like I can watch Tom Brady talk about how to throw a football and all of his techniques and all of his mechanics. That will do absolutely nothing for me unless I throw a football 10,000 times. And I think that's why most people end up frustrated and stuck and in this loop of infinite information and knowledge freely accessible, but no real progress being made in any area of their life. It's not just trading. This applies to anything.
Definitely. No, definitely. And Lance, I really appreciate you spent a lot more time than we originally planned. I just want to throw 1 or 2 like quick fire questions at you. One Please. Is, did you ever have an aha, light bulb moment in your trading career?
So I think we can get seduced, especially retrospectively, to attributing some of these light bulb moments when like it almost like minimizes the fact that like any light bulb moment ultimately comes from like thousands of hours of struggle, of work, of small changes, small refinements. What I will say is there was one trade that was like a turning point for me, just psychologically, when I was struggling. And I've told this story many a time, but essentially it was I was kind of not going to make it. I was interviewing at other firms. I was on the end of my rope at Trillium. I had a couple talks with the head of HR and my boss, and things weren't happening despite my best efforts. And there was this opportunity in Tesla, back when Tesla was probably about 1,000th the price, going on, I don't know, over a decade ago. And it was this exhaustion gap pattern. Essentially, I shorted Tesla, probably 99.9% lower than where it is now. And it was this exhaustion gap pattern where it was something I had seen in Playbook multiple times. And so I had gotten reps on it. It was a really good, high probability pattern that we liked. So I knew like, okay, if A happens, I need to do B. If X happens, I need to do Y. So I really had game planned this and put in the reps and playbooked it and looked through all the charts. And so sure enough, Tesla did what we thought it would do. I traded it per my playbook. If A happens, do B, and that's what I did. The play worked out very textbook style. And at a time when I was struggling, I put up $10,000 in a trade. And this was at a time when a good day for me was maybe $500, $1,000, $2,000. And it wasn't that the $10,000 was going to save my career, because I easily could have still washed out from there. But the realization and the key for my confidence, I guess, was my boss sitting next to me had probably made 250 grand in it or something. Who knows? I don't remember. And all I took away from that trade was like, wow, like I game planned for this pattern. This pattern, I understood why this happened, how to capture it. I traded this just as well as my boss did for all general purposes. It's like, yes, I made 10,000, but if I survive at this job and I get 5 years in, 10 years in, whatever, I could one day, even if I make 100 grand or 200 grand in this play, oh my God, that is a living. Like if I just get a couple of these a year, I did the actions that would allow me to make a living off of this job. And so that gave me a much needed burst of confidence when I was otherwise feeling hopeless, like I was just such a slow learner and couldn't execute well in real time. So that gave me hope to say, hey, Lance, like you might be able to make a living out of this.
I love that. No, I love that. And I think it's right what you said in terms of like that aha moment in reality is like a combination of many different things that accumulate into that aha slash, I when people have called it holy grail, I've always said the same. There isn't one thing. It's that accumulation. But I do think having that moment where you have, that proof of concept almost really does help the mental game of like saying, okay, I can do this. Like there's no difference between me and X person. As long as I do X, Y, and Z, this can be a reality.
Yeah, one quick thing. Like we see the end result of success without the inputs. And going back to my Hormozi binge recently, he told the story. I mean, he now has 3-4 million followers on like every platform. And he tells the story of he would start to do some of these posts, these videos, these whatever, and he would get 10 views or 6 views or 13 views. And for many, that would feel hopeless. He would just give up. Like, oh my God, I'm never going to go viral. But then he reframed it and he said, if I gave this talk to a room of 6 people or 13 people, would I have found that and judged this to be a success? And he's like, yeah, if there was a room of 6 people that listen to me talk about this, like that's actually super rad and awesome. Like, yeah, I can definitely build from that. And so sometimes it's like reframing and there's no moment, but then he used that to just put the consistent time in. And I'm sure with your podcast, right? Like, you've exploded on the scene, but there was no magic moment. It was the hundreds and hundreds of videos and podcast prep and interviewing and travel that you've put in. And then all of a sudden, boom, eventually it compounds.
It's accumulation, yeah. To finish up, Lance, because this one I feel like will be just great for the audience to walk away with. It's like if you had to point at one thing that traders after this call should all go focus on, what would that be?
So a lot of people will say, Lance, I don't know what the hard work is that I'm supposed to be doing. And I would say, good. And I can't tell you either because I don't know you and I don't know your situation. But so what I would say is turn off the social, turn off the distractions. If you don't know what hard work you should be focusing on, like do the deep reflection. That itself is part of the deep work. And like, you're not going to make progress if you don't just force. It's not comfortable. It's not easy, but you need to force yourself to do the deep thinking. And like, if you don't have the ability to do that deep thinking, you know, it's necessary. Like you gotta, and like all of that comes from spending a lot of time reflecting on questions. Like these epiphanies and these lessons, it comes from really thinking and running experiments in your head or in reality. Like, I don't know, like, does it work if I buy this moving average in this situation? I have no idea. That's a totally made up thing, but I'm just going to try this 10 times or 20 times or 50 times and collect data. And a lot of progress starts from just like being lost and just working through those emotions of even when I mentor some of the newer traders, they're like, but Lance, like, I just feel so overwhelmed and lost. I'm like, good. That's normal. And that's okay. Just keep on pushing. It's like when you learn a golf swing and you're trying to work on 7 or 8 different mechanics. You have no idea what's going wrong, why the ball's doing that. And it's like, okay, just struggle through, start to hone in on one thing, refine that, and then just take it one bit at a time. But it's not supposed to be obvious. It's not supposed to be easy, and it's not supposed to feel comfortable. And so that's what I would say.
No, I love that, Lance. I love that. And I really hope everyone goes away from this and really thinks about all the topics that we discussed today on a deep level and really reflect. But also, I would definitely suggest go and check out Lance's socials. His YouTube channel is really just starting to take off. I know he has a lot of incredible plans coming for all of you as well.
Mr. Beast, baby.
That's it. I love that.
Less funny, less good looking, older, washed up version of Mr. Beast. We're sending this.
I love it. But before you go, Lance, I just want to do this because, you know, I always love this and I've always wanted to do this. But again, a massive congratulations for being in the next Market Wizards book. Look, I've got this and this for you. I've got all these sound effects for you. But again, Lance, thank you for being here. Thank you for spending extra time with us as well. And hopefully we'll have you again in the future. And everyone, like I said, go check out Lance's socials and his YouTube channel because there's a wealth of knowledge for you to take away from and to help you become a better trader overall and just better in life as well, I would say, for sure. Lance,
thanks so much, Riz, and keep on crushing it, my man. You're doing amazing work.
Thank you, my friend. Thank you always. Thank you. We'll see you soon.
Bye.
Bye. Wow. You know, like even me, you know, even at this stage, sitting with such incredible traders across the world, you know, being in this environment and just having direct conversation with people like Lance, like Umar, it really, really it still blows me away. It still makes you think. And, you know, it's just an incredible wealth of knowledge that these people have. You can just feel it. You can feel it. Can everyone else feel it as well? Like you can just feel the level of knowledge that these traders have and experience. And what's very important is that you really take it on board, right? You really take it on board. And, you know, one thing I will really reflect on what Lance just talked about, and we actually have a massive surprise coming for you guys, a massive surprise that we just randomly happened whilst I was on the call there with Lance. So that'll be happening in a moment. But what he said was, like, identify weaknesses and focus on those weaknesses, right? Create sessions of deep work. We're in an age where, yes, okay, don't get me wrong, it's beneficial for you to watch our content, right? But I will always say, at the end of the day, our content, whether it's this live, whether it's Chart Fanatics, whether it's Words of Wisdom, our content is there to make you better. Our content is there to help you improve as a trader. However, at the end of the day, you're meant to take that knowledge and go do deep work, which means shutting off and focusing purely on the task at hand. Whether that's that weakness that you've identified within your trading, that gap in knowledge, whatever it may be. And also another important point that Lance made, which is that you need to have mentors, right? And that doesn't mean, and again, I try to highlight this because it's so important, a mentor isn't just about strategy. We're talking psychology. We are talking your health. We are talking about other things, whether it's even like needing therapy for things in your life that help you to understand yourself better. Accountability. And these don't all have to be paid. These could be free communities that you join or create or develop. And another important thing when it comes to, trying to get access to better people, trying to learn from other people, it's about providing value, showing that you're going to put in the work, right? Lance responds to so many traders that he doesn't even know because they do quality write-ups, for example, on X, right? It's so important to make sure you take that on board. And just remember, guys, this is incredible. This wouldn't be possible without you guys, without our guests, of course. And don't forget as well, Tuesday, tomorrow, you're going to be trading live, New York session with the one and only Marco Trades, where you're not going to get trapped in the markets. Check out our sponsors here. Look, Market Journal. Make sure you sign up to that. It's completely free. You get an update every single Sunday of what's happening fundamentally. Prop Firm Trader, completely free. Go check out the best prop firm deals, exclusive deals by using the code PFT. You automatically enter a 7-figure giveaway, which has gone up to $1.5 million. $1.5 million per week. One person wins just by using that code PFT, and we have something very exciting coming with that as well. TradeZella, 20% off, right? Who's doing the live trading tomorrow? Marco Trades. If you haven't already, go check out his Chart Fanatics episode. But here is your surprise, guys. Here is your surprise, right? I'm going to try and do this the right way this time somehow. So, let me tell you, it is so important to know that he has the record for the largest payout in prop firm history. Closing in on 5 or over 5 million in profits so far in his prop firm journey. It's the one and only, a surprise visit, Mr. JayCap himself. Look at that. That was incredible. Thank you. Thank you, Kyle, for being here. Really random. I know I just shot you a message when I saw you in the chat and said, oh, what's this? Still applauding. Really last minute and stuff. So I really appreciate you jumping on. I know we've only got you for a short period of time, but we will have you back for sure.
Brother.
But how are you, man?
I'm good. How are you?
I'm good, thank you. I'm really, really good. Let me just try and maybe bring this down a little bit there. I'm learning. I know you've been live streaming. I've seen you've been live streaming like gaming and opening Pokemon cards and all sorts now as well, which I love. But yeah, how things been? I know we haven't really had a chance to really connect since you had that record payout and we did that podcast. Like, how have things been?
Yeah, man, things have been really good. I've actually taken my foot off the gas a little bit on the markets. I think, volatility comes in spurts, and I think Lance retweeted something like that to me. And it's very important to know, those pockets of opportunity only appear a couple times a year, right? And it's really about taking advantage of those distinct opportunities that they don't come around very often, right? When we're getting major macro sentiment shifts, when we're getting a lot of volatility in the markets, it's not something that is always occurring all the time. And I think a lot of traders have a hard time dealing with that. They think that every single day is going to be the next day where, the market runs 1,000 points, or whatever the case is. And they don't know how to navigate the markets when it's not doing that, right? They don't know how to close their trades when it's not reaching their full take profit. They don't know how to manage themselves in that downtime, right? In those periods of choppiness. So they end up blowing their accounts. And then by the time the markets actually start moving again and the volatility starts picking up again, their mental capital is drained and they don't have any capital in their accounts to actually take the risk on those trades that pan out heavily in their favor, right? So for me, a lot of it's been, trying to keep what I've made so far. Many people out there, and I'm sure you guys are, anybody that's listening to this probably knows what I'm talking about. You have a really, really big month. You expect that same volatility to be in place the next month, and you give a lot of that back. So a lot of the profits that I have is going into other avenues. It's not just going into a personal trading account. Yes, I could take $1 million and put it into my personal account, but is that really the wise thing to do in this current moment? Probably not, right? So I think it's very important to know that there are pockets of opportunity, and it's about positioning yourself in a manner where, the experience will drive that. You will know, you will kind of have that gut feel for the markets when volatility picks up or when it's about to pick up, right? The headlines shift a little bit. The markets are winding up for a very long time. And then all of a sudden you have this massive volatility day that spikes, right? And the VIX jumps by twice the amount. And you can really position yourself with low risk to high reward. And those are the opportunities you're looking for. You're looking for skewed risk to reward. And then the rest of the time is just spent staying alive, right? You're trying to protect the capital. Maybe you're going for base hits, 1-to-1s, 1-to-2s. And earlier in my career, what would happen was I would place a trade and my take profit would be 1,000 pips away, right? And then my the range that we were stuck in, maybe it was only 50 to 100 pips a day, and not realizing like, hey, we might be stuck in this pattern for a very long time. And those opportunities don't come around very often, right? When oil went negative, the CAD futures jumped crazy, and those opportunities, they don't come around very often, right? And even when you're in that position, you still have to manage the risk appropriately because you don't know if that trade's going to start going against you or not. So my biggest thing is, right, I've had a very profitable Q1, Q2. My biggest goal is to not give any of that back, or not give, a large amount of that back over the coming months.
Definitely, yeah. Well, that was the interesting thing, because I remember when we were talking about doing a live stream, that was a topic I really wanted to look at, because I'm sure it would be so interesting for people to hear. But in terms of like, did you feel any sort of difference, or what was the impact? Because you had already achieved close to, or if not the same amount or over, in terms of spread out payouts over your career, compared to obviously having this huge lump sum come in from obviously trading profits. Like, was there a difference? Was there anything that really stood out to you as a difference at all?
No, and I think that's something that Lance really touched on too, is that you're just trying to focus on the process. To me, the dollar amounts, they don't really make a difference in what I'm doing as far as trading. Like, I try not to get too excited, and I try not to get too low about losing streaks, right? If you get too flustered when it comes time to sit in front of the charts, you end up making poor mental mistakes. So I think, when it comes to that aha moment with your trading, I feel like it never truly comes. Like, yes, there are specific parts of your system that you understand, like, hey, maybe I shouldn't do this, or this is my emotional trigger, which is causing me to overtrade or over leverage. And it's more of a gradual thing that builds up over time. And I will tell you, without a doubt, the couple months that, created the 2.6 or $3 million payout, well, it was 2.6 in one payout, right? But I had previously received, $40,000, $60,000 payouts leading up into the uncapped payout. Nothing really changed from last year and the year before to then, right? It was the same process. It was just that the volatility picked up and I was able to capitalize on larger moves. But the process was still the same. I was still entering trades that made sense. I was still exiting when trades made sense to take profit, right? So I was still exiting based on time of day or day of week. And the numbers just get larger and larger. But nothing really changes from like an aha moment perspective where it's like, I've cracked the code. There's always something new to learn, and the numbers just get bigger. And that's something that you just have to get comfortable with. Not everybody can get to that level of risk. I think I've mentioned it before, but my previous career that I was in with construction management, the fact that I was managing like $25 million, $30 million home budgets, and I had like 2 or 3 of them on my desk, that gave me such a huge edge in the markets, because when I look at it as a total, it's really just a numbers game. So if I'm taking 1 unit of risk, does it really matter if it's $100 or $1,000 or $10,000? If it goes 1 to 2R, it's still a 2R trade. So if you can learn how to do that on a small account, you have to learn how to scale that aggressively. Not so much as far as, adding new things to your system. You have to find something that's boring, that's repeatable, that you can scale infinitely. So a lot of traders do is, once they get a system that works for them and they're making $100, $200 consistently, now all of a sudden they start to risk $500. Something clicks in their brain where it's like, all right, well, now I'm risking more money. Now I need to learn more information to manage this risk. But that's not necessarily the case. The case is that you have a system and a strategy, and the only thing that you have to add is your emotional resilience to the larger P&L swings. That's the only thing that really has to change, is the way that you approach the markets and the way that you look at risk in general has to change. Because a lot of people, right, when they start risking more and more money, they think they have to start changing up their system. So nothing really changed from, that course of me making $1.2 million over the course of 2 years versus 3 months. I was still showing up to the charts, still doing the same thing, and still trying to remain even keel across all of those trades that I take. Because a 6-figure day, if that derails your process, then you have work to do, right?
Mm-hmm.
working $1,000 a day. If that derails your process, you get elated over it, and now all of a sudden tomorrow you're doing something that's totally outside of your system. That's a problem, right?
So at this stage in your career, when you do find yourself, on a back end of a losing streak or some consecutive losses, or even times when you're struggling to get a read for maybe a prolonged period of time, and that frustration starts to kick in, if at all. But that's really the question: is what does that reality look like for you, even at this stage in your career, when you're in those moments? What thoughts go through your head? What are your go-to actions and processes?
Yeah, so I will say this. I've been lately communicating more and more with more veteran traders, people that have been in the markets for 30, 40 years. And the way that they bring it up is the same issues that I'm dealing with right now, right? They go through slow periods. They go through periods where it feels like nothing that they do is, right. It's not working. And you kind of have to just grind it out. Like, trading is not ever going to be like a smooth sailing thing. Like, once you learn enough information, it doesn't automatically make it extremely easy, right? So when I'm going through losing streaks, when I'm going through periods where the market is just sideways, it's still very difficult for me to manage, because emotionally, I want to be able to make money every single day, right? Everybody would love to say, I can make money every single day. I can treat the markets like an ATM. But when you go through those periods, you realize, like, all right, no matter what I've done up to this point, even though I've had a crazy amount of success, anybody that's listening to this podcast or to this live stream, you guys will continuously go through those stages or those periods of trading where it feels like you can't get anything right. And it's more so about how I manage myself in those frustrating times than try and force my way out of a frustrating period, because I can't control when the markets are going to start moving again and when they're going to start presenting clean price action. Like, that's something that I am not in control of. And the only thing that I can control is how often I participate in the markets, and if I can just sit still. If I can just sit still, I already know that I'm performing at a level that most traders can't. A lot of traders, they can't filter out when the markets are slow and when their setups aren't appearing. So they go in the markets, they force trades, and then they end up even more frustrated, right? And that's what you're trying to avoid. You're trying to avoid those periods where you're frustrated, you're trying to force trades now, and now you're doing more damage to yourself mentally and to your account capital. So yeah, the biggest thing for me is spending time off the charts. Like, I don't need to, even as a full-time trader, I don't need to be in front of the screens 8 hours a day, right? My eyes start bleeding, I get tired and fatigued. And then when the opportunity does arise, I don't have the mental capacity to place risk or even manage the positions. So the biggest thing for me is to just try and take it slow. And I think slowing down your goals and what you're expecting out of markets plays a huge factor in your success long term.
Was there ever a moment in your trading career before you had started to really have any sort of big wins, where you assumed that when you finally get those big wins, that's it, trading sorted, life sorted? Was there ever like a deflating moment when you realized the reality?
I think so. I think once you get to a certain point and once you start seeing success, you do realize, like, that is the ultimate reality of trading, is that trading is going to be difficult if you're going to be participating in markets for the lifetime of your career. And maybe that's why some traders like to, make their bank and then leave, because it is stressful at times. You're putting risk behind your opinions of the market, and that is very uncomfortable to do at times, right? There are other businesses that you can go into where you feel more confident about generating a return. But trading is like one of the only businesses where it could take an infinite amount of money from you, right? Yeah, the biggest thing is to recognize that there are levels to this game. So no matter what level you get to, those same emotions are going to keep popping up. You're going to get frustrated. Your edge isn't going to pan out 100% of the time. And it's about, having that mental resilience to keep going if this is something that you want to do long term.
What would you want your trading legacy to be if you walked away today?
Really, honestly, getting into the education side of things where I'm actually helping other traders reach their goals and, change their financial background, their financial environments, that to me is leaving a much bigger impact than anything I could do for myself personally. Yes, I can set myself up and my wife up, my family members up, but I think leaving a longer lasting legacy as far as educating traders. And yes, there are skeptical people out there that say, oh, this guy's just another person selling a course, or whatever the case is, he's just another mentor. And the reality of that space is that the same things that I'm teaching were things that I learned from somebody else, right? And this is just the cycle of education and trading. A lot of these things that people are talking about, it's not reinventing the wheel. It's just other traders having a different perspective, and it's about you connecting with that perspective and resonating with it, right?
Mm-hmm.
There were some mentors that I tried to learn from that I just couldn't resonate with. Maybe I wasn't on the same page as them, but all the advice that they did provide, it was the same advice that I'm trying to pass along to everybody else, right? So people need to realize that nobody's really reinventing the wheel here. The same trading information that's been out there for decades is going to be the same trading information that's going to be out here for the next 20, 30, 40, 50 years. Because the biggest problem is the human element. The human element of you taking a trade, you placing risk, and you being comfortable with money fluctuating in up and down. That is the challenge of trading. It's not so much the analysis. It's not so much a specific trading strategy. It's really about how can I get these people to grow as a person and view life differently than what, causes most traders to fail, which is fear and greed.
No, definitely. I love that. And seeing as we know each other more closely, this is a question someone submitted, which is, if you could only trade one setup for the rest of your career, which would it be and why?
It would most likely be the liquidity raid or fair value gap, both of those. So I use both of those for context, and I take both of those trades very frequently. The reason why I like a liquidity raid is because it shows where traders are being trapped, right? It shows where buyers are being absorbed below old lows. If I can see that those traders are being trapped on the wrong side and the market's rallying after taking out short-term lows, that's a trade that I'm going to take 9 times out of 10 because it shows human emotion in the charts. It shows where people are piling into the trade at the wrong time and going the opposite direction. And then the fair value gap is essentially where institutions or whoever is buying up the market or selling the market, there's an imbalance there. So when I'm trading an imbalance, I want to be on the right side. So if there's a large buy side imbalance, I'm just waiting for that retracement to get in sync with all of that volume, right?
Love that. And here's a really good question someone said here in the live chat. Is there a point where you start seeing success and slow profitability like I am experiencing right now? What could I do to sustain that?
Yeah, so for me and for many other traders out there, break-even stage is very, very hard to go through because it feels like you're putting in all this work and you're not getting any results. And then you're slowly starting to build confidence. You're slowly starting to earn profits. And then at some point, you're a profitable trader, but you realize that the same process that you had when you were a break-even trader, maybe you're just doing it a little bit better, right? It's about getting a little bit better at all these small things over time and refining what you're doing. So for me, trade management is something that is constantly evolving. I can never perfect it. My exits are never perfect. And, those are two things that if I get slowly better and better at those, my foundation, which is my edge, trading liquidity raids or fair value gaps, will get better over time as well. How do I juice these trade setups for more and more without having to go on emotional tilts if it goes against me? But yeah, when it comes to profitability, I would say it's like a slow and gradual thing. You kind of figure out your emotional triggers, and that was a big thing for me. I think Tom Dante had a worksheet that was called the Demon Finder. You have to work on those things that are really holding you back. And for me, that was over leveraging and over trading and revenge trading, which I would say is probably 90% of traders' downfall, right? Those three things will keep you from being profitable long term. Even if you have 3 months of profitability, you might have one day where it erases all 3 of those months. And it's those mistakes that you can't have. Those are non-negotiables around. I cannot over leverage on my trades. I cannot over trade. I cannot revenge trade. If you can find out those emotional triggers, And I'm not saying entirely uproot them, but have those actions less of a part of your trading. Yes, I still do it from time to time, but I catch myself very quickly. A lot of people go on autopilot. They don't know that they're doing it, first of all, right? And they're just sitting in front of the charts, trading. And at the end of the day, now they recognize their mistake. But by then, it's already too late, right? Everybody knows that they have this, I guess, little demon on their shoulder that's telling them to take the next trade because they're so confident about it. Then by the end of the day, they're like, you know what? I probably shouldn't have done that. And it's more of a case of I knew better, right? That's traders' biggest downfall is most of these traders, I would say 90 to 95% of traders out there do have an edge. It's just that they cannot implement that edge for long periods of time and consistently.
That is so true. And actually, just now that you mentioned that, and seeing as we have you, with the our last two guests haven't traded prop firms, and there's been a lot of prop firm questions. Here's one specifically that I think a lot of people will resonate with. Some people have thrown in the chat, which is if you were to speak to a trader who is burning funded challenges over and over, what would you advise them to do?
So the first thing that you need to do is figure out how to keep one. I think once you can figure out how to keep one, then it becomes a matter of like, okay, how do I turn this one account that I have into an actual payout, right? If you can't do that, then you have no shot of making it in the prop firm space. You have skill sets that you need to work on. And just like Lance said, I could tell you how to do it, and I have told you how to do it, and many others have told you how to do it. But it's more of a thing of getting your reps in and actually doing it on your own, right? If you're taking lessons from Tiger Woods and he's telling you how to swing a golf club, you still have to put in the reps, right? So it doesn't matter who you're learning under. And I think a lot of traders out there are looking for this one mentor that's going to give them the silver spoon and just feed them trades and feed them all these ideas for the rest of their life. And now all of a sudden they're going to become multimillionaires. Even if I do that, you're still not going to learn properly. And even if I tell you the perfect golf swing, you still can't replicate it because you still haven't put the time in on the range or on the course, whatever the case is. At the end of the day, you have to be the one going through those motions, learning how to protect a funded account. All right, it's very simple. If you're going into drawdown, start risking less. Okay, start giving yourself more of a chance to survive that drawdown period. Because what happens is a lot of traders, once that equity curve starts pointing down, they start making really bad mistakes, right? They start sizing up. They want to make back the losses because they're too focused on the P&L. But really, the reps around keeping a funded account is a skill set on its own. Learning how to flatline the equity curve is a skill set on its own. You have to learn how to do that through practice. I can tell you how I do it. Okay, if I take a loss or two losses, the fastest thing that you do is cut your risk on the next trade. 8 out of 10 people are not going to be able to do it. It's just a matter of discipline. It's a matter of knowing what you should be doing and actually doing it, though, because most traders know what they should be doing. They know they should be journaling their trades. They know they should be back testing to identify their edge. But a lot of traders just aren't doing it. Even in my community, I have them, I've posted homework assignments for these students to do. Get a sample size of 25 liquidity rates. Not many people have done it. I have like 400 people in my community. Probably 20 to 25 people may have maybe sat down and actually put in the work to do that, right? It's a lot of traders treat it like a hobby, unfortunately, and they don't really take it seriously because, yes, it's a lot of work, but at the same time, you're getting distracted by the live markets because backtesting and getting all this information and all the sample sizes is not paying you. So what people do is they skip all that homework, they skip all the work that they have to do outside of the screens, and then they just go right into the live markets, and they think that that's getting them reps, but they're not realizing like their emotional volatility is keeping them from actually learning something.
Definitely, man. And just to wrap up, because I know you've literally just squeezed this in randomly and you have things to do, no doubt, and we will definitely do an official version of this. But just to wrap things up, multi-7-figure trader, phenomenal returns. Did you ever at one point in your journey have anything that felt like an aha moment, something that felt like a light bulb or a click or a significant moment in your trading career?
Yeah, I think the biggest aha moment for me was that I just needed to submit my control to the markets because I had such a huge problem of trying to micromanage every single trade. If it wasn't moving exactly how I wanted it to, I would end up closing the trade or going the opposite direction and just piled on the losses, even though they were small, paper cuts here and there. I would end up taking massive losses because I just didn't trust myself to hold on to the trade long enough and accept that I have no control over the markets. Once I place the risk on, right, the parameters that I set in place, the stop loss and the take profit, those should be areas where, that's my invalidation. Unless it goes to my invalidation level, I can't do anything about the trade. And that was probably the hardest thing to learn, is being uncomfortable sitting with open risk for long periods of time if I have to. I don't know how long it's going to take to move to my take profit. Nobody really does. Everybody would love to see the trade go straight to their target as soon as they enter the trade, which is what most people are expecting.
Yeah.
Right. But their expectations are not realistic. And I think that's the biggest thing, is the realistic expectation of markets is that markets are random, and they can be extremely random at times. You have to accept that you're going to be wrong a lot. Right. If you can't accept that the markets are in control, it's harder to take stop losses. It's harder to admit that you're wrong, which I would say as men is very hard to do. It's like an ego thing. And I think maybe females have an advantage where they can willingly accept losses and move on to the next trade. Whereas men, it's like, I have to prove myself that I'm correct about this trade. I used to get in arguments with my friends. The market is going to go to this specific level. And, if I get stopped out, well, I'm going to just re-enter because I know I'm right. And I can't control where that market is going to go once I get invalidated. In fact, that was probably the biggest aha moment for me. It allowed me to sit back and kind of just let the markets do what they have to do. I can't control what it's going to do, right?
Definitely. Yeah, Kyle, I want to finish up on a funny one for you, just for you. What's it like being the only verified ICT trader in the world, including ICT himself?
Man, I don't know. Like, I
See what I did
have no comment about it. I honestly think
I'm joking with you. Don't worry about that. I was joking.
No. For me, I will say this though. To me, the strategy doesn't matter as much as the person that's trading the strategy. For me, it's so much more important the mindset that you take to trading. And one of your guests that you've had on, Randy Howell, I learned a lot from him. Is that the mind that most traders bring to trading, is not suited for profitability.
Yes.
Right. It's not suited for profitability. And the biggest thing is that you have to relinquish control over everything. You have to accept the risk. You have to accept the trade might not work out. And all of those things aligned, I don't think it really matters what type of strategy you use. It's about the mindset that you bring with you. So, if I take a trader that has a really great mindset, I don't think it matters if he's trading ICT, if he's trading supply and demand, he's trading trend lines. If they have the right mindset around trading, I think they will become a profitable trader.
That is the truth right there. And I'm glad you mentioned Randy as a sneak surprise for anyone watching live or watching the recording. Randy is on our next stream next week, so that should be really, really fun. And
awesome.
Kyle, again, thank you so much for joining in, and we will have you back officially. I will add your links to your socials in the description after we've wrapped up the video. So, if you're watching the recording, go check those out. I'm sure you already follow Kyle, no doubt. But if you're not, go follow him. Like I said, absolutely legendary trader. I've said it from probably the first time I met Kyle a couple years ago now, actually, where I said he was probably the most professional trader I had come across within the retail space, and was definitely on path to be a future market wizard. And I have no doubt about that. That has only been cemented even more and more of observing you and being around you and seeing you reach higher highs and really face those higher lows and those adversity with head on and with truth, and really sharing transparently to the entire community as well during those moments, which is not easy. And Kyle, much love to you. Thank you for joining. And I guess we'll see you very, very soon.
Appreciate it, Riz. Take care, man.
Take care, man. Thank you. Everyone, what an incredible trader. What an incredible trader, incredible friend with Kyle there. Absolute legend. Absolute legend. And, I must say, it's been a pleasure so far. We do have, obviously, the world-renowned Jack Schwager, the inspiration, to come. We're just getting hold of him. The team's just getting hold of him now, making sure he gets the links, etc. So we'll keep you posted with that as we continue this live stream. And what an honor. What an honor it is for me, right, to be able to host such a live stream with some of my incredible friends who are traders, who only became my friend thanks to the podcast, right? And again, that's a big thank you to all of you for tuning in. Let me pull up the live chat. Apologies, actually, that just goes away when I click something. So that's back there. Let me move this laptop over here so that doesn't run out of battery. As I was saying, a few of you have said picking winners, like how's that done? That is done through YouTube because obviously as part of the giveaways you have to subscribe. But we will be then asking the winners to show us, you know, their comments, etc. Whatever was asked for, reposted, and so on. So don't worry about that. If anyone did not follow the rules, then we will continue on the either the stories or the next stream. We have obviously tomorrow's stream with Marco Trades, and we have Thursday stream, with TG Capital the whole week. So don't worry about that. In terms of playbooks, don't forget, guys, chartfanatics.com. You can see it all over this live stream right now. Chartfanatics.com. You can download every single trader's strategy PDF for free, simply by just going on there and putting in your email. So make sure you do that, because at the end of the day, we're trying to get you as much free value as possible, and that is literally just a way that you can house and keep that moving forward. So yeah. We do have Mr. Jack Schwager with us. He's going to be joining in any minute now, so I'm very much looking forward to that. But don't forget, guys, live trading. So my session is going to be more so the live Q&As, live podcasts. I'll talk about psychology. I'll even do some charts as well and break down what I'm seeing personally. But remember, guys, I'm just more part-time trading, right? I showcase my results when I get them. I've done 80K in payouts over the last 3-4 months on FTMO. I have been put down to 1% risk, so I've been trying to find my feet with that and trying to edit my style, if you will. But we're here and focused to, of course, the verified traders who will be live trading, like Marco, tomorrow and Wednesday for this week, and Thursday with TG Capital. You're going to see live trading on NQ, on gold, on many assets, and you're going to get to see that firsthand, and I would not miss that for the world, because these are phenomenal traders, and you will definitely elevate your trading by doing so. So make sure you tune into that as well. But Jack Schwager will be joining us, and make sure you have your questions ready. Like, if you have specific questions from the book that you have read, the many books of Market Wizards, the Market Wizards series, if there's a particular question on a particular interview that he did, or you want more insights, get them ready and make sure to keep throwing them in the chat there. He will be joining any moment now. But I think one thing that's so important, that every single guest, from Jack to Umar to Kyle to Lance to anyone else who joins Chart Fanatics Live or Chart Fanatics, or any trader that you come across, anyone who you think is successful, is they were persistent. They were persistent even in the face of adversity, even in the face of struggle. They continued on. And kind of to Lance's point, is that they focused. They focused on the things that needed to be done. They didn't give in to the comfortability and the luxuries and the distractions of everyday life, because we all have it. We all have distractions, whether it's family drama, whether it's the TV, whether it's extracurricular activities. We all have it, but we all have to make a choice. And if becoming a successful trader is more important to you, then you will do that every single time. And that's what's most important, and that is the secret to success. It's not a secret, it's hard work. But without further ado, here we go now. Here we go.
Okay.
There we go. It's the one and only. I'm going to do an introduction for you, Jack, as always, if you don't mind.
Fine.
The huge inspiration behind the podcast, the whole reason I am here today, being able to host Jack in the first place and have the viewers that we do, is thanks to the one and only Jack Schwager, the author of Market Wizards, who has inspired an entire generation, and I would say multi-generations of traders now. And he is with us today. Jack, how are you?
I'm great, thanks.
I really appreciate you being here with us today. I know obviously it's much earlier in the day for you, so I really do appreciate it. Jack, I don't want to take up too much of your time today. And I was just wondering, maybe just starting out, I know we got to touch on it on our episode that just went out. It went out a week ago, but we filmed it in January. So it must have felt like a long time. But you have announced publicly that you have a new edition of the book coming out. What sort of insights can you give in terms of this new edition for Market Wizards?
Okay, so it's in some ways similar and in some ways different. So it basically follows the general format of all the former Market Wizard books. One difference is I'm working with a co-author, George Coyle, but doesn't change. I'm still doing the final draft of it, of everything. And so it's still very much the same vein as the other Market Wizard books. The main difference, I guess, is maybe in the audience, not the audience, but the subjects. This time around, this is the youngest group of interview subjects I've ever done, and the book will be called Market Wizards: The Next Generation. So, given that I'm looking for trading records of over 10 years, and hopefully considerably longer, there's a limit to how young the subjects can be.
True. Yeah.
But I think, if I'm not mistaken, all but one is 41 or younger. So
Wow.
basically, mostly in the 30s. I don't know if anybody's in their 20s. I think basically in their 30s. So in that sense, it's a younger group of traders, and I guess these traders also, I noticed differences between them and the books I've done before. Like, things have come up in terms of what's been helpful to them, which never came up in any other Market Wizard book. So, playing video games as a child very actively and enthusiastically and with great passion, apparently is helpful in trading. I say that not from my own experience, obviously, but from these, quite a number of these traders have mentioned that. So that's something that's come up that's never come up in any other book. And they tend to be, I think this group of traders is considerably more short term than the average traders that I've interviewed in other books.
Interesting.
Which have ranged from short to long. But I think I'm trying to, just about all these traders, as they've become more successful and their equity has grown, some of them have gravitated to longer hold periods, but almost all of them started off with short-term trading.
Wow, that is interesting, especially the gaming. I'm sure there's a lot of people in the live chat right now probably really thinking, oh wow, I'm hoping that comes through for them as well. There's an interesting question here actually from someone in the chat, which is from your first interviews in the 1980s to today, have you noticed edges disappearing faster? And if so, how can a trader build something durable in today's faster markets? Interesting.
Any what factor? I missed the word. The adjective.
Notice any edges disappearing faster.
Edges. One thing that does in this new book, one thing you'll see mentioned by I don't know if I'd say everybody I interviewed, but certainly quite a few, is that the edges don't stay. Well, in some cases, the general approach may still work, but it rhymes, like the old cliche, it rhymes, but it's not the same exactly. And a lot of edges just go away totally. So for some traders, one trader, just for him, every edge that he's had, he's traded scores of different strategies. Every edge eventually goes away. And they go away for different reasons. Algos have had a lot to do with it. Strategies that used to be viable became arbed away, so to speak, by algos, which are just much quicker than any human, obviously. So that's been one source. And then just as things become, take a simple example, something like index rebalancing, right? The first people who kind of figured out that, these stocks are going into the index, these stocks are coming out. And they anticipate which ones are going in, which ones going out. The long the ones that are going in, the short the ones that are going out. Hey, that's a great, almost sure thing strategy. And the edge was there for, I don't know, maybe a few years, maybe, I don't know. But once it became too well known and quantified and automatic, it's whatever edge is there is pretty small. So that's an example of why, how an edge goes away. And as I said, the algo advent has been an element that makes edges go away. But somehow, at least all the traders I'm interviewing, they've always found when one edge has gone away, they found something else to do that worked.
Definitely. One interesting question actually is, after interviewing obviously over 70 of the world's best traders, were there any that had it easy in the very beginning? Any that showed that they just, came into the game, came into trading and had a really easy time and sort of scaled quite quickly? Or did all of them have quite a similar base?
No, it's a mix. Quite a few in this new book had some very rough early going. In fact, one chapter, I believe, if I remember correctly, the title is "The Fifth Time is the Charm." So that was maybe more prevalent. But yeah, there are a couple of traders who were, just successful right off the bat, and almost inexplicably so. I'm thinking of, and I'm not at this point using names or saying who's in the book, but I'll say this much about this particular trader. Ended up training a lot. He's probably trained. He has his own company prop company where he hires traders and trains traders. And by his estimate, he's trained well over 200 traders. But in his case, he was kind of thrown into it and somehow was success without being taught anything. Just somehow by just watching the screen and his own, he did have a built-in, I think he was born with a tremendous sense of cutting losses short. I mean, if he's offside on a trade, he just gets out very quickly, and he's done that from the very beginning. So that can explain why he didn't have any large drawdowns or anything like that. But it doesn't explain where he got the edge to be profitable. And somehow, and it's just from his own description, it's nobody taught him. It's more just like intensively watching the screen for for every day, all day, and just picking up on patterns, short-term patterns, and just getting on things for very short-term, quick moves. And he just had that instinct. And so that's an example of somebody successful right off the start.
Definitely. There's an interesting one here, actually, is what is the common problem with traders when they stop doing that or they start implementing it, they finally become profitable? Is there something, I know we've discussed this actually, I'm sure this is probably a question that you get quite often in terms of reoccurring themes across traders from the books. If I'm not mistaken, the one that we really highlighted in our episode, on both episodes to be fair, was in terms of risk management.
Yeah, and well, I mean, that always, and I can't avoid having emphasis on that because in every book, in every trader, this is something that's come up again and again and again. I mean, just these traders will all tell you, with a few very rare exceptions, will tell you that risk management is really what the key to their success is. And so I have to relay that because that's what they're telling me. And it may not be sexy and it may not be what people want to hear, but it's just a reality. And like I said, I wouldn't say every successful trader, but just such a vast majority emphasize that you have to believe it's true.
Yeah, definitely. I even from my experience now of interviewing many of the traders that you've referred to as actually from the Market Wizard series, has really elevated and shown that as well. Do you know one interesting thing I would like to ask? It's a little kind of off topic, but it's an interesting thing to me, and I think it would actually open the eyes to the process that traders go through to be highlighted in your book, which is in terms of that verification process, like being able to verify records. obviously we're not going to go into a specific detail of a trader, but in terms of like how extensive, I've heard like some of these traders have explained to me how extensive that process is with you, Jack, and it's something I inspire to try and replicate at some point. I'm just at 2 years right now. You mentioned already 10 years, which is incredible. But is there any insight you can share in terms of like that process you go through when selecting traders for your book?
Yeah, it's not a cookie cutter process. Ideally, well, if you're doing hedge funds, it's a bit easier. If you're doing a hedge fund manager, there's usually, not usually, there's always an audit to track record, almost always by a name accounting firm, and so it becomes just a matter of relying on that. And sure, I mean, if the auditor was taken in, and I mean, I can't, I'm not an expert on this. And by the way, I should say in this book, my co-author George Coyle, I mean, he's taken on the brunt of all of that, and that's been, it's been a very big role that he's played, and he's been more rigorous than I've ever been. So anyway, the easy one is, but this book is specifically solo traders, so there are no hedge funds, so there's no easy out on that one.
Mm-hmm.
A lot of these traders are prop traders, and that presents its own difficulties.
Yes,
because prop trading firms do not share their records, so it gets a little tough. But you have other means. Well, first of all, some of these traders leave, and then you have their own track records. For example, so one trader I can think of for about 10 years plus was at a prop firm, and he did take screenshots of his P&L and all that. So from the prop firm, so I have that, even though officially, prop firms don't give you numbers. But in addition, he went off and opened his own account with a name brokerage, and made quite a little fortune on that. And so that in itself would have been verification, although it wasn't long enough, but he had the prior prop record. So combined all of that, you say, yeah, this is real. So it's different. And then we've had cases where we've had to go to tax records just to get the certainty, so you could just see it off the tax record.
true.
In terms, so it's a various combinations, but we can't put anybody in the book unless we have some reasonable verification.
Definitely, I love that. And that's, again, as I said, something that I'm inspired. I took inspiration from our original first time I sat down with you, is where I made that decision to make that change, because I've think it's very important, and especially in terms of transparency and being able to really take on board what is being shared within, whether it's the books or the podcast. It makes a big difference, I think, as well, Jack.
It is, because there are unfortunately, as in many places, but trading probably has a larger share than most places, endeavors of charlatans out there, and so you have to be skeptical.
Definitely. Is there any particular market throughout these series that has stood out as having more edge, or the most edge, in terms of whether it's futures or forex or stocks?
Yeah. So in this book, I guess there are traders. Most of the traders are equity traders. Okay. There are no forex traders in this book.
Interesting.
Yeah, I mean, just not by choice, just the way it would happen.
Mm-hmm.
There are two futures traders in the book.
Nice.
And interestingly, so one of the interview subjects basically made his initial, most of his fortune, and we're talking literally hundreds of millions.
Wow.
Trading of all things agricultural futures, which you wouldn't think is a source of being able to generate such great profits. And not only that, not only ag futures, but ag future spreads, which is one level further out. And for those of you who are not familiar with spreads or futures, basically that's buying let's say you buy July corn, sell December corn. That's a spread. So, that was his bread and butter trade for 2/3 of his career. And then and subsequently he's expanded into more broader markets. But he made his early fortune that way. So so the traders who've done it on, as I said, not only futures, not only ag futures, but spreads. This guy in spread and ag futures.
Would you say, noticing that, as you mentioned earlier, that this is probably the youngest collection of market wizards, would you say that's down to the advances in technology and the accessibility of trading in comparison to when the prior books, interviews were taking place, etc.?
Yeah, maybe. I think it's also, maybe it's reflective of a change in the younger traders. Just, I think in the last 10 years and 20 years, we've seen more young people attracted into trading. So I think it may become more of a thing. But whatever reason, it just turned out to be the traders that I was coming up with on the solo traders.
Definitely. One thing that was interesting, though, obviously Jason Shapiro, for example, is his major part of his edge is being against the masses, against the trade, against the trend, or what mass sentiment. Did you find that the majority of traders in the book were trading alongside the trend? In line with the Interesting.
No. Actually, a lot of them. One trade that. Like they all expanded into different trades eventually, but I'd almost say a majority of the traders in the book shared one type of trade that's early part, and typically in the early part of their career.
Interesting.
And then they usually became too large to bother with it. But that particular trade was shorting small cap stocks.
Wow. That
what they call parabolic up moves on what is essentially meaningless news. And so we're talking about small cap stocks that have like argument, say, as an example, say a 500% up move in 3 days, that type of thing. That was a trade, like shorting those type of stocks was a trade that came up over and over, at least at some part of their career, for, I would say, the majority of these traders.
That is a very interesting correlation for sure, because I was
surprised myself how often it came up.
Definitely. No, I can only imagine. The interesting thing is, I know we haven't discussed names of obviously the new book. We did just have on before you Lance, and I know something that he explains quite often online is how he believes there's so much more edge within the stock market, within sort of the low cap, mid cap stocks, in comparison to Forex, as an example, due to its efficiency. And it is interesting to hear that. I actually, when I was asking the question, you could tell I was framing it as if most traders followed the trend. So I'm glad you cut me off there and corrected me, because I'm sure that's opened a lot of people's eyes.
Oh, not. And I would say in this book, I'm trying to think, is there really anybody who's a true trend follower? Not really. I mean, of course, in a very short-term sense, they are. Even in the trade, look, now we're getting into semantics to some extent, unfortunately. But let's say a trader who's shorting one of these stocks, and I'm thinking one in particular technique. So waiting until it looks like it's breaking down, not so much. So they typically wouldn't like to go short right into the face of the rally, but looking for signs for it to start failing, and then adding as it starts, moving more and more down again. And so in that sense, even though they're fading, it's a mean reversion trade, right? It's a mean reversion trade, but they're waiting until the reversion starts. Mm-hmm. And then in that sense, they whiff the trend back down again. So like I say, there's a bit of semantics to it. So even in that pure mean reversion trade, essentially it is there has some trend element to it.
Definitely, no, that makes sense. And as a sort of final question for you, Jack, 'cause I know I don't want to take up too much of your time today, and I'm sure hopefully we'll be able to do this again sometime in the future, especially maybe when around the time the new edition does come out. I would definitely love to do that with you.
Yeah, I'll let you. Yeah, I'll let you know when it's. I'll get you a copy of the book ahead of publication, and try to. We can work it out. We'll do an interview right before the book comes out.
Definitely, no, that would be an honor. And just to finish up, then, in terms of, as you already mentioned, a lot of traders had this reoccurring theme early on in terms of having this sort of low cap strategy. However, how often did you find that over the course of a career, traders would quite consistently have to adapt? And I don't mean like completely change strategy, but adapt to market conditions or varying edges, etc. Is that a reoccurring theme at all?
It is, and you will see it in interview after interview. Adaption is a really big theme that comes across, and that you literally can't rest on just because you have something that works. You can't just sit back and trade that and assume, okay, I've got it, my career is set. You have to continue to adapt. That's what almost every one of these traders has said at some point.
Definitely. I love that. Jack, honestly, a huge honor, as always, to have you with us. If everyone watching this stream, if you have not read Market Wizards, which I would be shocked if you haven't, but if you haven't, make sure you grab a copy of that book. Not only the original, but the series of Market Wizards book is a wealth of knowledge. And again, that is where I take inspiration from in terms of the podcast. And, we stand on Jack's shoulders in that sense, in terms of he has led the way for what we do every single day. So Jack, again, thank you for being here with us today.
Pleasure is always nice speaking to you.
Always. Have a good rest of your day.
Have a good one. Yeah.
Thanks. You. Take care.
Take care.
Guys, what an incredible wealth of experience there from Jack. And the last point, I do believe, is one of the most important. One of the most important, because no matter who you are as a trader, no matter how good you get, no matter whatever it is, you always have to adapt as a trader. That does not end. Adapting as a trader is something you always have to do. Now, don't let that scare you. I think a lot of traders, they hear that and they automatically get scared of what that means. That does not mean that you need to change strategy over and over and over again. Let's just recap some of the themes we've talked about to really highlight this point, which is A+ setups, having stronger edge. As Umar said, it's not just about strategy. It's about the timing. It's about what's going on within the market. It's about also how well you performed at that time. Have you got a bit of a cushion? Have you performed well coming into this? Is confidence high? Going on to Lance's point when it comes to an A+ setup and how important things are outside of your trading, in terms of your sleep, in terms of your pre-market routine, your write-ups, the level of work you're putting in. These are all things that make up an A+ setup, right? But an A+ setup isn't the same always, because over a long-term career, no matter how much of a consistent trader you are, you have to be willing to adapt, because the markets will adapt. We've seen it this year. If you compare the last 2 to 3 years of markets with Biden being the president of the US and the way that his administration did monetary policy, etc., and putting fundamentals to one side, because I do not understand fundamentals at a high degree. I promise you that. But you can still tell there was a huge difference in terms of volatility, in terms of what was in play at the time, in terms of what the market would react to, right? Trump comes in. Even before, when he just got voted as president, we saw the change straight away. We saw the market start to price in different decisions and different policy, right? You saw the crypto markets explode. You saw stocks and everything start to shift. Then when he became president and started making decisions and implementing things, some things that were priced in already, some things that weren't, right? Some things that he didn't follow through with instantly. We saw a shift. Then we saw a bit of stagnation. Then again, now we're starting to see a pickup in volatility over certain names, certain tariff talks, etc. Now, the best traders will adapt in these scenarios. Now, what does adaptation look like? It doesn't necessarily look like a change in entire strategy, going from swing trading to scalping, right? No. It will look like the case of, okay, currently the markets are very volatile. Normally, I might go for a 1 to 2 risk to reward, for example, or I might go for just 40 points on the day. However, the average that this particular instrument is moving is now 120, 150 points in a day, as an example. Therefore, a trader will learn to adapt to take advantage of that edge. Suddenly, now instead of capturing 40 points in a day, they know the average movement for the day is 140, 150. They might go and try and capture 100 points, which they wouldn't have done the last 3 months, 6 months, whatever that conditions was happening at that time. So it's extremely, extremely important to be able to adapt, no matter where you are in your journey, but especially as a consistent trader. Don't fall into the trap of thinking you've mastered it and now you have this ultimate key that unlocks the matrix of the markets. That just doesn't exist. You have to be able to adapt and be able to adapt consistently when the markets dictate it to you. And also adapting, though, on a day-to-day basis based on you, on your mental capital, as a few of the guests today spoke about. But also you being able to adapt to when you know you haven't slept enough, when you know something is off within your personal life. And if you bring that to trading, you will probably have a really bad time. So it's very, very, very important to always keep that in mind. Very important indeed. Very important indeed. Now, before we go away, I just want to say a few things. One, thank you all for being here. Smash the like button, drop a comment with your biggest takeaway from today's live stream. Be sure to comment who you want to see in the future with guests with me, any improvements, any things you would like to see. In terms of giveaways, thank you to everyone who participated and well done to everyone who won. Again, we will be double checking those and confirming those in terms of making sure that everything was followed. Also, don't forget, you have Marco Trades tomorrow at 9 a.m. Eastern Time for the Market Open trading live with you. Before we go, though, any last questions for me at all, if you have any? I saw one earlier in terms of, do I enjoy what I do in terms of the podcast and everything? Of course, I love it. It's that's why I do that. That's why I dropped trading. I stopped trading for 2 years to focus on it, even though it wasn't successful at the time, simply because I love podcasting. I love speaking to people. Originally, the podcast wasn't going to be just a trading podcast. It was to speak to all sorts of different people, but I'm still very, very happy that it's a trading podcast because I love trading and it allows me to live that passion while not actively full-time trading. So it's incredible. Absolutely incredible. And yeah, if there are any final questions, please do let me know. But it's been incredible. How long have we been running? For over 3 hours for our first stream. I'll take that. I'll take that as a win. I'll take that as a win. When is the next live? It is tomorrow. So Tuesday. That is tomorrow. Tomorrow at 9 a.m. Eastern Time with Marco Trades. Wednesday, 9 a.m. Eastern Time with Marco as well. Thursday, 9 a.m. with TG Capital. And then next week, we'll do Tuesday and Thursday with Marco and Wednesday with TG. Someone asked something. Would love to see Romeo CRT on one of your shows. We can't, unfortunately, because he's not a verified trader. So that's never going to happen. That's just the way it goes. We take the verification seriously. We take it seriously. Giveaways have been announced throughout the live stream, as we said. Any giveaways tomorrow? Yes, we will have some giveaways tomorrow. We'll have giveaways pretty much on most live streams, to be fair. So always try and tune in. And remember, though, it's not about the giveaways. We love doing giveaways. I tend not to. I used to do them on Words of Wisdom a lot. I don't do them as much anymore because people just really focus on the giveaways, and that's not what we're here for. It's not what we're here for. We are here for value and to actually help you become a trader. Now, giveaways are great. They can help you in your trading career. But at the end of the day, it's about how you use them and what knowledge you have to use them. So really focus on what really matters, which is what we're trying to do by bringing you verified traders and the biggest names in this entire industry that will directly help you with their advice. So yeah. So any name, if anyone puts a name in here, or why not this person, etc., just realize if they're a big name and they haven't been on the podcast, or you can't see their episode on the podcast anymore, it means that they do not have a verified track record, right? Or they have not been willing to submit statements to us, right? Which doesn't mean that they don't have a track record, but it's not that hard to submit statements if you really have statements, right? Really. And we take it very, very seriously. I cannot tell you the amount of traders I've turned away, right? We've turned away a lot, right? And again, it might not be because they don't have statements. They don't want to send it us for whatever reason, but really they don't, yeah. Carmine Risotto, verified trader. Statements, one of the best traders I know in terms of their ability to explain order flow and their transparency on every trade and the reality of the journey. Winning streak, losing streak, he shares it all. Really great trader. Can't wait to have him on here, actually. Maybe we can do some order flow talk and look at some charts as well and everything with him on. But yeah. But again, if you're mentioning names and they're not on the pod and they used to be on the pod, it means I asked them for verification and they didn't send it me yet. Doesn't mean that they won't, but it hasn't yet. But everyone, thank you for tuning in. Thank you so much. I will be back next week. I will give you guys a sneak peek. We have Chris Camillo, market wizard who took $80,000 to over $60 million trading information on TikTok, right? Which is incredible. So he will be on next week. We have Randy Howe, trading psychologist, one of the best in the world, who we just did an episode with a few weeks back, done incredibly well. He will be joining us next week. And we also have an incredible trader known as Peter Brandt, who has very interesting thoughts when it comes to prop firms, but also a market wizard, incredible trader. And I cannot wait to have him next week as well. So we have 3 more traders next week, 2 market wizards, 1 phenomenal world-class psychologist. So be ready with your questions. And there's one question there. Is Forex a waste of time? It's not a waste of time. It's not a waste of time, but understand the edge that you have to have within Forex, right? Because there aren't many verified Forex traders. There are some. We've had them on the pod. There aren't many, but there is edge in Forex, but you have to understand how much edge that you can go after and capture. Okay. So, everyone, it's been a pleasure. Thank you once again. I don't want to leave, but I kind of have to because it's been 3 hours of me in this sauna. I don't think that's healthy. But guys, take care. And I will see you personally next week. But catch Marco on Trading Live, 9 a.m. Eastern Time tomorrow here on Chart Fanatics Live. Thank you again.